All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live, folks. We've got Oracle earnings in the next 20 minutes, which is going to be the biggest earnings of this week. It is going to be one of the most important earnings for the data center names. So we've got a lot to talk about in terms of going into those earnings, and hopefully they will be in the right direction. But outside of those earnings, we've had a lot of things happen in the past couple of hours. And I know every day when I start off the market close, I say we've had a lot of things happen, but it's because we have a lot of things happen every single day. NVIDIA, she's losing her steam right there. She was pushing 186. Now she's at 183. The S&P 500 is going red at 677. We were pushing 682. There is a reason for this. Software just had an ugly day. That's down 2%. And that reason is going to feel pretty weird when I explain it. But quite frankly, that reason shouldn't be that weird. Because yesterday, the market moved up because Trump said he thinks the war is coming to an end. It was essentially a tweet by a CBS reporter. Today, a tweet also has moved trillions of dollars in the market. So what happened in the past hour? U.S. Energy Secretary Chris Wright posted a tweet that a U.S. ship had officially gone through the Strait of Hormuz. The markets loved it. Oil went below $80. We were at $78 on the crude futures. We're now back to $85. And the idea that the war was coming to an end started to have some legitimacy. Then, 20 minutes later, he deleted the tweet. And the markets tanked because basically the markets felt, wait a second, was this guy lying about this? Here's what Carolyn Levitt had to say when she was asked about this.
Yes, I was made aware of this post. I haven't had a chance to talk to the Energy Secretary about it directly. However, I know the post was taken down pretty quickly, and I can confirm that the U.S. Navy has not escorted a tanker or a vessel at this time, though, of course, that's an option the president has said he will absolutely utilize if and when necessary at the appropriate time.
So she's confirming the post was deleted. She's confirming that the U.S. has not had a ship go through the Strait of Hormuz. This was the video that Chris Wright, the Energy Secretary, posted that he then deleted 10 minutes later.
Iran has control over a key waterway that's keeping nearly a fifth of the world's oil supply at bay.
We are having restrictions of flow of energy through the Straits of Hormuz right now. We announced that we will step into the insurance market and insure tankers to go through. A large oil tanker went through about 36 hours ago. I think you will see more of those coming.
Obviously, the press secretary just said that is completely false, and I think that's why the guy deleted it. I mean, everyone's going to sign their own intentions to why he tweeted it, but maybe, honestly, he just didn't know that, like, a U.S. ship had not gone through the Strait of Hormuz. But there's a video of him literally saying a ship just went through the Strait of Hormuz. So it's not even about not knowing. The guy said it in front of an audience that he was talking to at the time. So he just happened to, I guess, post it, which means he was wrong on the post, but he was also wrong about saying it in public. So that just created a ton of market momentum to the downside after we had a relatively strong day. S&P 500 right there just cannot go green. And once again, what is the story? The story is we are stuck in the chop, and you kind of have to embrace it. We go up one day, we go down one day, and there's a lot of different headlines that control if we go up or down. And to the extent that we go up and down, yesterday it was the war is ending soon, markets recover, trillions of dollars in market cap added. Today, the exact opposite, not because Trump said the war is not ending soon, but because the implicit nature of deleting a tweet that would essentially show some level of legitimacy to the idea that tensions were easing by having a U.S. ship go through the Strait of Hormuz. That deletion of the tweet ended up leading things to the wrong direction. And then you've got Axios reporting that Iran is putting mines inside of the Strait of Hormuz. Trump just tweeted this 5 minutes ago. If Iran has put out any mines in the Hormuz Strait and we have no reports of them doing so, we want them removed immediately. If for any reason mines were placed and they are not removed forthwith, the military consequences to Iran will be at a level never seen before. If, on the other hand, they remove what may have been placed, it will be a giant step in the right direction. One of the reasons why Kraken is catching such a big today, Kraken Robotics, I know a lot of people like that stock, is because apparently, and I found this out today, they specialize in technology that can remove mines in the water. Again, I'm not fully educated on that, but that stock right there up 10% on the day based on this idea, which if Iran is actually doing this, and the U.S. is going to need to buy technology to try to get rid of this as soon as possible, if Iran doesn't actually get rid of the mines themselves, then boom, you know, that's where that stock will catch a bid. Again, it's stock pickers market. Certain stocks based on headlines are catching the bid. Others are in WTI. We are now above 85. We were at basically 87. This thing was down 15% on the day, and we are now green. or sorry, not green. We're still down 8%, but it is a massive reversal from when it was at 78 about an hour ago. So once again, just an absolutely crazy day. So many things happening back and forth, and that's what's leading to the momentum to the upside or downside. I mean, NVIDIA is looking like it was going to have a massively green day, 183.40 now. It was at 186, selling off as you see oil start to spike up. SMH, that's selling off. Software still is at a horrible day. Palantir 150, Salesforce down 2%. AMD now going red. Tesla barely holding on to 398, 5 cents away from going red. Google losing its momentum. Robinhood now below 80. Even Circle was up 10%. Now it's up 5%. ZETA down 4%. So software, energy, and semis all getting hit based on some of these headlines with Chris Wright. 676 on the S&P 500 as that continues to go red. What if it went through unescorted? That's a good question. At least the market perception right here is that there was no ship at all that went through. And, Caroline Leavitt officially confirmed that there was not a ship that went through, even if there was a potential for it to go unescorted. So I think the markets are basically interpreting this as, hey, Trump said the war was ending. We felt good about what he said. And we thought there was some real proof that the war was actually going to end based on this idea that, they're getting ships through the Strait of Hormuz. And now that that's not happening based on this deletion of the post, that's how the markets are going in a different direction. Again, this was the tweet from CBS. U.S. intelligence assets have begun to see indications Iran is taking steps to deploy mines in the Strait of Hormuz. Iran is using smaller crafts that can carry 2 to 3 mines each. While Iran's mine stock isn't publicly known, estimates over the years have ranged from roughly 2,000 to 6,000 naval mines of Iranian, Chinese, and Russian-made variants. And that's why Trump put out the tweet that he put out right now. Also, here's what Caroline Leavitt said around how long the war would last.
The operation was going faster than anticipated. What is your current timeline for how long the war will last?
So look, as you know, Steve, the president and the U.S. military's initial timeline was about 4 to 6 weeks to achieve the full objectives of Operation Epic Fury. Again, to destroy their missiles and their ability to make them, destroy their Navy, permanently deny them nuclear weapons forever, and to, of course, weaken their evil terrorist proxies in the region. We know that the U.S. military and our brave warfighters are quickly and expeditiously executing these objectives well ahead of schedule. But ultimately, the operations will end when the commander-in-chief determines the military objectives have been met, fully realized, and that Iran is in a position of complete and unconditional surrender, whether they say it or not.
Does the president still want Iran's unconditional surrender?
Well, when President Trump says that Iran is in a place of unconditional surrender, he's not claiming the Iranian regime is going to come out and say that themselves. What the president means is that Iran's threats will no longer be backed by a ballistic missile arsenal that protects them from building a nuclear bomb in their country.
Once again, that answer is a bit confusing, right? Because the reporter's like, so what does an unconditional surrender mean? And Caroline Leavitt's like, basically, whenever Trump says they've unconditionally surrendered, when he feels their military is not strong enough to continue fighting, which gives the markets more confusion about the idea that the war is going to end soon, or is the war actually going to end soon? Is that 4 weeks from now, 5 weeks from now, 4 days? And then you have oil prices spiking up, which obviously is not the best based on the Strait of Hormuz stuff. And that's why the market ends up being as choppy as it is today. This shouldn't surprise anybody. I mean, we went up like crazy yesterday based off a CBS tweet from something Trump said. So it makes sense that we're going down, and we're not necessarily super, super red on the day, but obviously we have given up a lot of the gains that we had when we were green. S&P was pushing 683. Actually, we did touch 683, 683.36, right back down to 676. It is becoming a game that happens every single day. Having said that, we do have another game coming up, which is a game of earnings, and that game is for Oracle. I'm going to put the pump or dump poll in the chat. Let's get a preview of that and see what people think, because that is also going to be a very, very important earnings. Triple V, thank you for being here, and thank you for the very, very kind $200 super chat. Deeply, deeply appreciate that. Thank you for being here, sir, and let's get this update on Oracle.
Status of its $300 billion deal, the timeline of its data center projects across the nation, and beyond OpenAI, is Oracle diversifying its pipeline? We know that customer concentration has been a key concern for investors, with the stock down another 21% or so this year, and Oracle's 5-year credit default swaps remaining elevated. Bond investors saying that this has become a popular way to hedge the risk tied to the AI trade. Now, on financing, that latest $50 billion debt and equity plan announced last month did reduce near-term funding concerns, but a source familiar said layoffs could be in the cards as a way to shore up capital. Analysts have also cited divestitures as another lever, so look out for that as well, Scott.
So the big thing for Oracle is going to be the $350 billion in backlog of RPO. Is that going to stick? The stock was at 345. The stock is now, as of today, 150. So it's been cut more than half. And it's obviously been a pretty ugly spell as it's been taking a hit. Larry Ellison was actually the richest person in the world for a few hours when that did happen back in September of last year. And, now the market is questioning, okay, has the extent of the credit default swap increase, which is the hedge that investors have on Oracle's debt defaulting, been priced into the stock? And, it can get very technical, but stock going from 345 to 150, which is very close to Liberation Day levels as of last year, makes you think, yeah, enough risk has technically been priced in on the idea of the data centers defaulting. And then if they don't default, you have a lot of upside left if there's ROI. Oracle's now trading at 19 times forward earnings. Not necessarily the most expensive stock in the world, trades at 7 times sale. Their free cash flow is going to go down the drain based on all this data center financing. But I think the most important thing from this earnings is going to be, do you guys actually have the demand that you're saying for data centers? How is the financing going to take place over the coming years? Remember, Larry Ellison just pledged 80% of his net worth to be able to buy Warner Brothers. So he is also levered up in terms of not only Oracle debt, but being able to finance the acquisition of Warner Brothers for Paramount. And then third, is OpenAI actually going to pay you the $300 billion of RPO that they think they're going to get paid? Now, Oracle has a very strong data center business, or not data center, a database business, that even if the data center business went to shit, there is something really there. But the amount of debt that they took on and the level of equity they issued in order to be able to get here, investors are going to want to see some level of confidence that the data center business is going in the right direction, that there will be an ROI. And in the next probably 5 minutes, we're going to find out to see what happens. Let me know in the chat if you own Oracle or not. This is, again, going to be a very big one. NBIS, CRWV, IREN, Cypher, all of those are going to potentially make a move on Oracle. I mean, last time they didn't, but the day after they made a move. But if Oracle, drops 10% or goes up 10%, I think we will see some level of movement across those separate stocks, which is also going to be really important. The other headline we have on the war, which this has not been confirmed yet, but this is what Axios is reporting. The U.S. has asked Israel to stop its strikes on Iranian energy infrastructure. Details from the article. President Trump aims to cooperate with Iran's oil sector after the war. The request marks the first time the Trump administration has restricted Israel since the war began. Fears are growing that strikes could trigger massive Iranian retaliatory attacks on energy infrastructure across Gulf states, which is kind of what we've seen already over the past couple of days. And the U.S. is concerned that continued strikes would send oil prices higher. This is very consistent with the reporting we saw from the Wall Street Journal this morning, which is that Trump is starting to get really annoyed that these oil prices are going up. And part of the reason he came out yesterday and said, don't worry, the war is going to end soon, is to give some level of safety to the markets of thinking that oil prices, should be relaxed if the war is going to end soon. But, if they're requesting that Israel stop attacking, then, maybe the White House is starting to get a bit more animated about making sure oil stays low. XLE right there, down about 1.2% of the day. IGV still down 2.3%. NVIDIA getting that 184 handle. Maybe it closes at 184, but it was at 186 as that one is green. And then Apple, 260 as that is green. Extreme, thank you for the $10 super chat. I have 560 shares at $171. Wish me luck. All right, so you need $20 to break even on this thing. The implied move, let me check real quick. We got 2 minutes. I believe the implied move is 7.2%, which would be from 150. You're looking at $10 up or $10 down. All right, so you need about a 15% move to get those $20 and break even. I'm hoping for a pump. I don't have a dog in this race, but obviously Oracle doing well is good for the broader data center business. It's good for NVIDIA. It's good for AI, good for NBIS, CRWV, all those names. Oracle going down is not necessarily bad for those names, especially if it's an Oracle specific reason, but it doesn't help with sentiment. So it would be nice to see Oracle doing well, and hopefully we're going to see what happens. We are not going to be streaming the call. We will have Jason on for Technical Tuesday. So for those that want to stream the call, Tanner, Neil, Steve are streaming it. I was going to stream it, but you guys wanted TT more. So we are going to cover the earnings, and then in about 20 minutes, we'll get into Technical Tuesday, and hopefully we have a stock that goes higher, and then we'll get into all the technicals. All right, Tuesday, March 10th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, we are down for the day. We are also down for the day as we are done, as the S&P goes red on the poll. The majority of you, let's see if you voted pump, dump, or flat. We should be getting Oracle's numbers pretty soon. That tends to happen usually right after the battle. They don't take too long. 45% of you say dump. The majority of you are actually a bit more bearish on Oracle. All right, we're going to see S&P 500, 677, slightly red on the day. Apple was green, 260. NVIDIA closed at 184.77. That was up 1.16%. Grab down 2% on the day. Airbnb was down 1.19%. Bitcoin actually got that $70,000 level, which is not too bad. It was almost at 71.2 this morning. Palantir down about 3.38%. Tesla was down. No, Tesla was up 50 cents on the day, basically flat. AMD also basically flat, 203, but it did end green. Circle up 5%. BMNR was up about 0.34%. ZETA got hit with all the other software names, down about 3%. Also, we have AeroVironment. That's going to be another one that we take a look at. That was down 2% on the day. This is another big drone stock. By the way, Jeff got back to me from Red Cat, and he said he just missed it on his calendar. So he should be on the show tomorrow, and it'll be fun to talk to him about what's going on in the drone world. S&P again, 677. ONDS, another drone stock, that was up 3% on the day. And you have Oklo right here. Oh, that also was down on the day. Applied Materials and SK Hynix report long-term R&D partnership. Let's see if that's affecting Applied Materials. That stock is flat after hours. Definitely good for SK Hynix as they continue to expand throughout the broader AI ecosystem. Memory also had a decent day. Micron was up 4%. It was almost at 420 in the morning. Ended out at 403, but the stock was at 350 a couple days ago. So nice to see that getting the rebound. And the Qs barely ended green on the day, 607.77. Okay, Oracle, let's see what we got. We should be getting the results very soon. I am on their website. If we don't get it now, we should be getting it in about 3 minutes. I think 4:05 is usually the latest. Oracle tends to be pretty quick. And we're going to see. We are going to see if we can get some numbers that are pretty good. Let me get the street expectations on Oracle. On EPS, the street wants $1.69. On revenue, they want $16.9 billion. Remember, Oracle was like growing their AI revenues triple digits last year. So if they can kind of guide for that fiscal year for 2026 to have that same level of momentum and potentially raise their RPO, even though, you know, it's at $350 billion, maybe they can get some other customers to contribute to that RPO and diversify away from OpenAI. There's a lot of catalysts I can imagine that would get Oracle to pump. And, you know, the downside feels like it's already priced in, but obviously any lack of growth or concerns about data center financing, that's when this one also gets hit. We do not have the results yet. We are still waiting for it. Should be out in a couple of minutes. I'm not with the crew because we're going to be streaming Technical Tuesday. And so they're going to be listening to the call themselves. And we will move on to TT. Again, the other big pieces of news today were about NVIDIA. Number one, they introduced a new product. Well, it's reported that they've introduced a new product. And this product is essentially going to be an open source AI agent platform, which would be very good for selling into the enterprise, potentially not the best for some of the software companies, although the article reported that NVIDIA wants to work with Salesforce and ServiceNow, et cetera. So we'll see more in GTC. And then the other reason that happened, or the other reason why the market was potentially excited about NVIDIA today is because they invested in the ex-CTO of OpenAI, Mia Murati's startup called Thinking Labs, rumored to be valued at a $50 billion valuation. And that partnership / investment, theoretically, you know, could be another big customer for NVIDIA. And those were two of the big AI headlines that you had today. All right, we got about 1 minute. Let's see what we get for Oracle. Let's see if it can be a big one. We should be getting it in about 30 seconds right here. Yes, we'll have Technical Tuesday after this. We also have AeroVironment, which is slightly up after hours. Don't have their numbers yet, but we should get that soon with Oracle. And then let's see. Let's see what can happen. Okay, put in the chat if you're long this one. Oh, we're green. We are green. Okay, I'm just looking at the stock, not at the numbers. Let's see if this greeny green can last. We are up 2.24. You guys know my rule on earnings. We need at least a 4% candle to think that the momentum has a chance of sticking. 2 to 3% reverses way too quickly. There you go. She's green. 154 she touched, 3%. We're not getting above 4% yet. It's fading a little bit. It's not really that decisive. Aero Environment also up 0.5%. All right, here are the numbers. Oracle revenue is a beat, 17.1 versus 16.8. Operating income is a beat, 7.38 billion versus 7.2. Software revenue is a beat, 6.12 billion versus 5.97. Cloud application revenue, which is essentially their SaaS, looks like a beat at 4 billion. Adjusted operating margins, 43% versus 42.7. That also is a beat. It looks like you've got a quadruple beat across the board for Oracle. The guidance is now the big thing that matters. So let's see if we can try to get those guidance numbers. Also the remaining performance obligations. But I mean, it doesn't look horrible. Stock's not really reacting in the most positive way. You've got a green candle. It's not anything crazy, 10 or 15%, but at least you're up 4. Okay, for fiscal year 2026, we expect revenue of 67 billion and capital expenditures of 50 billion. For 2027, which is their different fiscal year, we are raising total revenue guidance to 90 billion. I think that's good. I'm going to try to get the number expected against that. That seems relatively strong, and what the street wanted to see, at least on the whisper number. Total revenue guidance to 90 billion. Website doesn't have anything else out yet. They should be getting that pretty soon on the earnings release, and then we'll see. I mean, these are not bad numbers. These are not bad numbers. On the call, yes, they'll definitely explain more. Now we're seeing a little bit more momentum. There you go, up 6%. Starting to see like the market actually cares about this right here. 6.2%. Let's see if we can get 7. Let's try to get some more expectations. I'm trying to see RPO as well, if they increase that or not, which would be important. Cloud revenue, again, 8.9 billion versus 8.84. That's green. RPO 553 billion. Last quarter, they had 523. That's up 30 billion, folks. 30 billion for RPO. Oracle said demand for AI cloud infrastructure continues to outpace supply, driven by large-scale AI training and inference workloads. The company highlighted strong momentum in multi-cloud database adoption and said large AI contracts significantly boosted remaining performance obligations to 553 billion. Stock's up 7% now. I mean, dude, 30 billion in 90 days on RPO, especially if it's not Oracle, or sorry, if it's not OpenAI, is pretty damn good. They're guiding for 50% growth right here in their AI business as well. 50 billion of CapEx, 90 billion of revenue. 7.2, she's running 160. That's an $11 move. It's not a small move. Not a small move at all. I mean, these are pretty decent numbers. Again, cloud beat 8.3 versus 8.4, which I think the street was wanting to see if we could get there. 6.5%. Let's see. Yeah, is NVIDIA moving off of this? NVIDIA. Yeah, wow. NVIDIA's definitely getting a bid right here. That's Oracle, 185.18. Anything good on Oracle means that obviously more companies are buying chips, which is why Oracle can provide the data center capacity, which is good for NVIDIA, good for AMD, good for Broadcom. AMD, that's up a little bit. Broadcom is up a little bit. Let me know in the chat if anyone sold, if you took some profits here, if you bought before earnings and did a bit of an earnings gamble. Oracle right there, 7% on the day. 158. She's struggling to break through 160. But it would be nice if she could. Trump, the U.S. is deploying anti-drug trafficking technology and missiles to eliminate ships mining the Hormuz Strait. Okay, so Trump now getting ready to deploy new capabilities and technology to get rid of those mines as well. CapEx is 50 billion. CapEx is 50 billion. How about CoreWeave? CoreWeave is up a little bit after hours. Nebius is up after hours, 1.52. Okay, so Nebius likes it. IREN also likes it. That's up 1%. Cypher also likes it as well. Where did the VIX close on the day? It was red for the majority of the day. The VIX Got to a low of 22, closed at 25. Got to a high of around 27. Actually, no, the VIX ended, the VIX opened at 25 and it closed at 25.50. It's down a little bit after hours, but the VIX ended up going green on the day. That is incredible, given how much it ended up falling. NVIDIA right there, up about 0.5%. And then Oracle, 6.3. 6.3. Okay, Aero Environment is red. That's the next one we have today. Let's see if we can get those numbers. That is down 4%, 6%. Again, this got hit by a downgrade, and they lost a contract a week ago. That's why that stock fell like 20% in a day. It ended up recovering 10% of what it lost. Let's see if we can get these numbers. This is another drone company. Not the best. They missed on the top and the bottom, folks. Missed by 7% on EPS, 64 cents versus 69 cents expected. Missed on a revenue, 408 versus 475. They missed by 15%. About 50 million on revenue, a little bit more than that. Revenue is up 143% year over year, which is incredible growth. EPS is up 113% year over year. They are profitable. This is a $10 billion company, but you do have a double miss. You do have a double miss. That stock now down 7%. That stock down 7%. Will Oracle calm down the market nerves and we pump now? No, I mean, I think Oracle may calm down some elements of how the market's thinking about data centers, especially based on what they say on the call tonight. But Oracle is not going to calm down the market worries about crude oil or the Iranian war. It's just, it wouldn't help if Oracle went red. So it's good to see that Oracle's getting a bit more momentum. I'm trying to see on their website if we can get the actual release, because that would be nice to see some more specifics from them. Do we have it? Yes, here it is. Okay, we got it. Okay, so let's dive through these and we'll see how the stock reacts. RPO 553. That's up 325% year over year. Again, 350 of that is OpenAI. EPS 24% up year over year. Revenues are up 22%. Yeah, it's a big company, legacy company. Re-accelerating revenues to 22% is not bad at all. Cloud revenues up 44%. Infrastructure revenue up 84%. Oracle Cloud Database up 35%. SaaS revenue up 13%. Fusion Corp 17%. NetSuite 14%. That infrastructure revenue is really basically their AI revenue, and that's up 84% on the year. We don't have any quotes from the CEO on the actual press release. I guess we'll get some more explanation on the call. 5.5 billion in operating income. Again, 17.2 billion total revenues. Q3 was the first quarter in over 15 years where organic total revenue and non-GAAP earnings per share grew more than 20%. Cloud revenue was at the high end of our guidance. Total revenue was at the end of constant currency. Non-GAAP EPS was well above our guidance as well. I mean, these are not bad numbers. These are not bad numbers. I just really don't know if the market's going to give them that massive, massive pump higher. But it's not like the market is upset about this. 7.5%, 160 right here. She touched 161 for a second. Diamondback just offered 11 million shares in the secondaries. Ticker symbol FANG. That stock's down 2%. Another energy name that's taking advantage of this energy pump. It's not just the small companies. Even the big companies, $50 billion company will take advantage of the increase in energy. Diamondback, that's down 2% after hours. Oracle making a move right here, 7%, trying to hold on to it. Guidance for Aero Environment, I think that's why the stock's really getting hit, down 10% now. 1.95 billion. They're expecting to lose $200 million. Adjusted EBITDA at 285, adjusted EPS at 310. I think they missed on most of those metrics, especially the adjusted EBITDA. That's why that stock is now getting hit. Let's get an update here on Oracle as the street is liking it, up 7%.
Then beat on its bottom line, revenue ahead of consensus at 17.19 billion. And then if you break down revenue, cloud and software revenue come in above expectations. Cloud revenue at 8.91 billion, that is up 44% year over year. Also looking at guidance, revenue guidance being raised for 2027. One metric back to the third quarter, remaining performance obligations coming in at $553 billion That is slightly light than the $556 billion that the street was anticipating, but it is higher than what the company reported last quarter of $523 billion. Although I would point out that the pace of growth in RPO did slow a bit from last quarter. Nonetheless, it's a higher number than last quarter, which does suggest that demand is continuing to accelerate. We're looking at the stock up here by around 6% in overtime. I would also point out that short-term deferred revenue came in a bit light. Now we look to the earnings call, which begins in about 45 minutes, guys. And the questions are going to be around the revenue performance obligation, its backlog, how much is tied to OpenAI, and newer customers like NVIDIA and Meta. I would also point out financing. That's been a big concern for Oracle following that $50 billion debt and equity financing. The company says they do not expect to issue any additional bonds beyond the amount in calendar year 2026. They also point out, remember that $50 billion deal included debt and equity? We have not yet initiated the at-the-market equity portion of the financing program. The pace of dilution, that's going to be a key point as well, or question, I should say, when the call begins at 5 p.m. Eastern. Guys, more as we get it.
That's the other thing about the stock. They haven't hit the at the money yet. So if it does grow, or if the stock does like make a big move tomorrow, you know, Oracle might see that as their opportunity to dump some shares at the money, which might hurt the stock, but obviously would be good for them to raise some capital. Aero Environment really getting hit, down 10%. Oracle holding on to a 6% move. Got up to 7.5. Did not go red at all after hours. So it's been holding green. And RPO, again, it was a little bit lighter than expected, but still, you added $30 billion in 90 days. I'm very curious. Is that from OpenAI or who's that from? You know, are they doing some stuff with Anthropic? So maybe we'll get some more clarity on the call. But Oracle up 6.5%. Okay. That was the big one. That was the big one. Timothy said, I bought the $85 call for Jan 2028. Okay, so you bought super in the money, and I'm assuming you bought that today or a day before the earnings. So those calls will be up tomorrow. And you have a lot of time on those to stay above that $85 range. Micron right there, 405. That's up a bit after hours. Nebius up 1.32. IREN up 1.26. And then CRWV. Realistically, the call will determine kind of how the street thinks of this 6% move sustaining itself or not. Now 7.2%. Obviously, last time the call was kind of a disaster and the stock tanked. So I guess after the call, we'll find out and we'll see what happened. I bought it today. Okay, there you go. Those calls should be up tomorrow. I will not be playing the earnings call. Again, Tanner is streaming that. We are going to move on to Technical Tuesday in just a couple minutes, but these were the majority of the earnings. Again, the call is going to be at 5 p.m., so in about 40 minutes. CRWV up a little bit, Nebius up a little bit, and then at Oracle right there, up 7.3%. Before we get into TT, let's hear a little bit from Mr. Tom Lee, and then we will get into the technicals.
That's already taken out a lot of speculation. So to me, I think our bet would be markets are actually going to lift through the end of the month, that we're going to actually be positive for March and maybe hit 7,300. Later in the year is when we think a bear market might show itself.
What about oil, right? We're watching it so closely. We're driven by headlines, some of which are apparently erroneous. I don't know what do you do with that?
Yeah, I mean, it's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil. But if I look back at the last 2 days, oil's $15 higher than it was last week, but the S&P's higher. So to me, the market actually is handling higher oil prices better. And, you know, we wrote in our note this morning that we think higher oil prices are actually good for the U.S. stock market.
Yeah, see, I think that's going to be a really hard sell for people who are watching this program, like trying almost too hard to paint some bullish scenario. How in the world are higher oil prices, which then mean even higher gas prices, which mean higher jet fuel prices, and all sorts of other issues that are related to that input costs on a whole number of other industries? How is that possibly good for the stock market?
Yeah, part of it's a relative. You know, one, U.S. is an exporter of oil, so we net benefit as an economy from higher oil. The second is other countries are importers, so the U.S. not only looks better, but on a relative growth basis, it should outperform, which means flows back into the U.S. And the third is, as we worry about global growth for all the reasons you described, when growth is scarce, people buy growth stocks. The U.S. stock market is a growth index, so it's coming out of the rest of the world back into the U.S. So I think it's a rotation story.
All right. Speaking of,
All right. Well, that's what you got from Mr. Tom Lee. Again, the broader argument I think that most people agree with, which is that oil prices cannot be at these levels if we want to see earnings growth and broader risk on excitement. Gold and silver, speaking of risk on, also in green on the day. Gold up 2%, silver up 5%. But the larger story of the day was Oracle, and Oracle right there up 7.5%, 160.5 after hours. All right. Here we go, folks. We are going to get into the technicals. If you are new to the channel, this is what we do on Tuesdays. We spend about 3 hours and we look at lines on charts to try to figure out what might happen in the future. Some people agree with this stuff. Some people don't agree with that. But, you know, hopefully you get something out of it in terms of just thinking and learning more about a trading mentality around equity prices. And quite frankly, if you're just kind of curious what you think around where a stock might go, we're going to look at a bunch of different charts, a bunch of different stocks, and try to get some ideas on where we are in the cycle. We also just had non-farm payrolls, so that should give us a little bit more of an indication on how the S&P reacted and where this might continue to go. Obviously, when Trump tweets something and you get some update in the real world, none of this stuff ends up mattering, but at least for now, we try to get an understanding of it. Ladies and gentlemen, once again, Technical Tuesday, it is time to roll the intro.
What's up, buddy?
Hello. How are you doing?
I always like your intros, but today was pretty epic. We're gonna look at some lines, everybody.
Dude, it's so funny because there are so many people that are like, this technical shit is so stupid, it's so dumb. And then you go one Tuesday without it, and everyone's like, where's Jason? What's going on? So it's like 95% of people want it, but there's 5% that are stupid. But
I mean, it depends. Like, I mean, you could ask the chat how many people have made money off Technical Tuesday. I mean, it's probably it probably speaks for itself.
There definitely was a call you made on last week's show that we will talk about that has to do with Jeff Green.
Jeff Green. You don't want to do the hymns one? Well, that wasn't last week. That was like weeks before.
ETD was ridiculous, so we'll talk about that. We'll get deeper into it. Okay, yeah, let's get started. And let's get started with the S&P. We will be taking all of the request guys after like 10, 15 of the big large cap names. And yeah, we'll start with these and then we'll keep going from there.
Yeah, we can do that. So since you mentioned NFP, I'm just going to show you what it looks like.
By the way, a bunch of people told me they went to your NFP webinar and it was great.
Oh, so. Dude, if anybody went into this NFP, we gave away like almost I got in trouble. I think I gave away almost $10,000 worth of crap, dude. But I had fun. It was fun. I'll just
real quick before we continue, Trump just tweeted, I am pleased to report that within the last few hours, we have hit and completely destroyed 10 inactive mine-laying boats with more to follow. 10 inactive mine-laying boats.
10.
Okay. Yeah, okay. 10 inactive. Okay. All right. So there you go.
There we go.
Strike
so,
all right.
You know, as much as people probably don't want to look at this, I'm just going to go backwards in time to February. I'm going to start this really quick, but because you mentioned NFP, this is not this month's NFP, but February's NFP. And usually it's this stat has like about an 88% probability of locking in the high or the low for the month within 1%. And so this is what February looked like. I'm just going to play this forward on my trading view. But the high was 697, 689. And really what I'm thinking about whenever we get these releases, like, is this the high or the low? And essentially out of the gate on February, it looks pretty much like you're the low and, or this was the high. And this will probably be in this area resistance moving forward. And so as you play that forward, this is kind of what it looks like. Sometimes you'll get a little breach above. What I'm looking for to create a trend is a full open and full close above or below either the high or the low. And so I'm looking at February because it's going to still play, right? So every time we get one of these releases, it's always in play. It never goes away. And the same rules kind of apply. So we have like 1, 2, 3 closes below. I mean, this is pretty much safe to say at that point that was a low. And then so this month, we're about 3 days in. I actually don't have like a full open and close above or below. So the lines or the levels, since we're looking at lines today, is 678.58 and 669.7. That's actually, so you mark it from when the market gets the data after hours. So you'd have to, if you threw on like a smaller time frame chart, you'd see it pretty clean. This is when the data released. This was the low of the New York session. That's exactly how this works. But I'm looking for a full open and close above or below. Right now I have an open below, but I have a close above. So not going to happen. We're just going to go back to the highs. Today I have an open below and a close below. So again, I don't have a trend today. And both of these little wicks are actually within 1%. So stats hold. We're just kind of looking to see where are we going to go from here. But these are your major pivots. For right now, tomorrow we have CPI. We have a lot of news on deck. I think Friday we get some more data as well. So this could be slightly range bound. But like I said, last month's levels actually stay in play. So if we can get over 678, cool. From an S&P perspective, we can see as high as like the 697s. I mean, I would expect some trouble around 690, but just so we know, that's where we could go if we do get an open above and a push tomorrow with CPI, something like that. But in order to say, hey, we're at new all-time highs, I need to be trading well above 700.
Were you worried at all when we fell below 660 on yesterday?
I mean, from a long-term perspective,
no, just like the structure. Do you think it was getting ready to break? It wouldn't.
Over the weekend, dude, the weekend was gross. The Sunday futures was absolutely rancid. But like, I posted something about that too. It's like I first of all, I don't usually open new trades after these NFP days because I want to see where the trend is going to go. So like, I didn't have anything new. Like, I'm not opening new trades after an NFP because I need to see how the market's digesting. So I wasn't caught long or short. I was basically, basically pretty flat, which at the moment, I'll just tell you, I still am. We're looking across the board. I'm like, 650, I'll just say in the near term is the next downside target. If we do not hold this 680 level, it's 650, just slightly below the 200-day SMA on the S&P 500. But I don't really gauge anything. And plus Monday, so like, no, like I looked at it and I was like, this is just another day, because I wasn't already in something, because I just know like the stuff goes crazy after those days, and it's all a bunch of like smoke and mirrors half the time. Even closing at the highs yesterday, I'm not looking at doing anything because like I said, I don't have a reason to go long. My system's like, no. Just chill. And same thing today. Today, I'm actually leaning a little bit more bearish than I would be before, just because I really don't have an upside situation here.
Right.
And tomorrow, if we can't get over 678, I mean, I'm probably going to be short trading wise in the very short term. But we'll have to see, because even if we open at 675 and we close below 668 tomorrow, it's still going to be choppy. So I could still expect some kind of bounces. So that's where we are. I think the market's in limbo. It's a very funky spot. And I'll just tell you where the 650 kind of comes from. It's like this area over here. I do have a fundamental level that aligns to that, but because I've been yapping a little bit, it's about 651 right here that we could see an additional downside move if we get it. But I don't have, trading. I need a if this, then that. I don't have the if this yet, so I don't have a reason to take it. That's the biggest difference from investors. It's like investors are like, well, you'll front run things, you'll anticipate. You're like, oh, I have an edge. Trading, it's like stock going down, I'm short. Stock going up, I'm long for the most part. But that's where this comes from. Right over here. Let me just turn on a different For whatever reason, I'm not seeing my profile. I'll just throw this onto a daily. Yeah, let's just go daily because it's probably going to be a little bit better.
I mean, we broke above 680 today, which like felt encouraging until it didn't.
Yeah, like I said, I need to see that. I need to see like the full day trading through. Plus, we have this. We have a downward sloping 20-day SMA. We have a flattening to downward sloping 50-day SMA, and we have a 200-day that's probably going to start to flatten out if we can't start going higher. So, quite frankly, this looks choppy to sideways to me, something like that. But I've been pretty cautious over the last few weeks to use like this, counter trend bounce term, which we haven't had to use over the past few years. But the trend is broken still. And again, this area right here, 668, I think I had it. But if we breach a quick push to the downside, could bring us into that 650-ish range. And then you have everybody, oh, we lost the 200-day SMA, but it's kind of like a magnet at this point. So that's really what I'm looking at. It's a little discouraging because the distance between the 20 and the 50 are actually expanding, and I'm nowhere close to my death cross here on SPY. So I think it's neutral to bearish completely, to be clear on this. Qs, this one's a little bit different. This one, and this is where things get a little divergent, if you will. We're actually slightly above Friday's high. So this one's actually more somewhat encouraging here. It's a little shaky. We got a lot closer to the 200-day, but I think what I'm seeing in the charts is just a lot of apprehension. I mean, clearly we're not in a full-blown uptrend. We've had a little bit of a bout or pullback, but it's not like a big reason to get excited yet. Again, CPI tomorrow, Oracle tonight. We'll see if it holds. And then Friday is it GDP? Friday we have something else, PCE on Friday. So we have a lot to get through this week. I think, generally speaking, if you're long, there are certain things from a time frame perspective. It's a weird situation where like a lot of IGV, a lot of software names are, looking better. They look like they flushed out. So I kind of don't mind going bottom fishing in these instances because not everything is going to bottom at the same time. So I'll just start this. I'm going to do RSP and IGV since these are two tickers that we've been talking about quite a bit lately. 77 was that lower end support. We got a nice little bounce, but right now we're going kind of sideways. I actually think this could pull back slightly to 82. We'll see. I think Oracle is going to have a lot to do with this and the sector as a whole. So it's very much about if Oracle can hold its overnight move. But between IGV and again, if we do get a bounce on the software names, this can get close to 100 and still be a counter trend bounce, something like this. At which point I need to kind of take measures, or if it's a trade, I need to take profits. But this is constructive for a counter trend bounce, which means that I have to be a little bit more cautious as we go because it is still counter trend. RSP though, that's the one that's kind of worrying me. We've been talking about this. It's not, it's definitely weaker now. So the dynamic is like if the software names catch a bid, which is just a trading term, if the software names start to go up, but it's at the expense of the broader market, the indices is still going to be flat. So that's kind of where I would like to see a trend both in RSP and IGV, whatever direction, because I'm a trader, I really don't care if it's up or if it's down. But if these two are both going the same direction, look, I think it's going to be smooth sailing, whichever direction you want to trade, but follow these two as the combination. And again, because this one's a little bit weaker now, well, it's definitely weaker now. we just, this is kind of take profit. We talked about this last week too. This was take profit on like some of your oil plays for me. these were getting a little bit expensive, some of the debasement trades, if you will. And it was just so weird because oil, the commodity, to me last week, I don't know what it was trading at last week, maybe like 60, 70 bucks, was actually the catch-up trade. And I think that was my biggest thing last week was like, we're just in such a crazy spot where like, I don't mind taking some shots on some incredibly blown out software names. And at the same time, I'm looking at the geopolitical situation. It's like, you know, oil stocks and the debasement trade stocks are getting expensive, but it's so weird to say that crude itself was the catch-up trade.
Well, I was going to ask, can you do TA on crude? Is that even possible, or is it purely fundamental at this point?
No. I mean, it's very possible. Like it's absolutely possible. But so this is crude. I mean, all of the stuff that I always say, you know, stands. But I think for crude, you want to pull back, you know, your charts quite a bit. It's pretty sideways, but like I've been saying, the oil stocks themselves have already made a move where just if it's the chart alone, crude doesn't. Crude has not.
This is Colgate.
Oops.
Okay.
Good call. I always do that.
There you go.
Okay. Same story though.
Same story.
Yeah, it's a big spike. This is the 2025 crude oil high right here. So at this point, I think, yeah, they've caught up, but it's so fast and so insane to trade. It's like, dude, it would have had to have been a crazy one.
It fell 30 yesterday, and then it was down another 10 today, and then it reversed. I mean, this is.
Yeah, but I mean, at 65, after it started going after 65, it's like every day we are up like what 13% on crude coming into like the situation. And granted, you know, Trump does not want high oil prices, and this is the issue in general from a macro perspective, is that the stock market's going to have a conniption fit if crude is like sustained over $100 a barrel. It's just not going to like it from an inflation perspective, which makes CPI tomorrow, again, the market's favorite in like economic data point. It makes it more important because if we're hot coming in tomorrow and we see crude sustaining over 75, call it over last year's high. Yeah, that's not good from an inflation perspective. And we know that GDP is slowly coming down from the highs. So like that combination, it's not a fun combination. And so that's what I see the jitters on. At the same time, you look at earnings. I mean, I haven't clocked a better earnings quarter before. So it's like the dips still keep getting bought, but not maybe as strong as they were before. So I don't know what you want to put this, but on crude, yeah. So 2025, $75 on, this is futures.
That was the high last year, 75?
Yeah, 75. Wow. But again, if I just made this, let's say a weekly chart, it's kind of a catch-up trade, right? So like the breakout was over 75. If we come back and technically say breakout retest, you could see this is how you get to that 150, which is roughly over here. Now, this is highly geopolitically sensitive. And to that end, even though Trump isn't going to want to see crude this high, in this, you've seen how fast this thing moves. He's not going to be able to like put policy out or make major political moves to keep a near term, knee jerk reaction down. It's just gonna go, and then he's gonna have to fix it later. So that's kind of where we are.
But do you think theoretically you can trade this, or it's just way too contingent on what Trump said?
Honestly, as a trader, the only way to really trade this is buy at the open, sell, or buy at the close, sell at the open, man. Like you buy at the close, sell at the open, because intraday they're all gonna like sell it off, or you just sell it at the open. Right. But and close your short at the close, because overnight nobody wants to take the risk, right? Overnight you're like, I don't know what's going to happen when the market's closed, if there's going to be an attack somewhere, or maybe there's even a ceasefire, right? Like, and so from that perspective, if it's USO options, again, This is the equivalent of the 2025 all-time highs, like 92. USO it does not track crude like you would think it does, by the way. It's a daily mover. So it's a daily tracking ETF. It does not move clearly, it does not move the same way as crude futures. But yeah, this is where we are. We did break out, believe it or not, that we retested and held the 2025 high so far. So technically, if we get like sideways, or if we're holding over 92 on USO or holding over 75 on crude, it's technically a long. So that's where we are on crude. Otherwise, you got to wait till it's below 75, and then you can have a heyday with it, because that would just be what we call like a look above and fail. But if you're long oil stocks or oil the commodity, this is just like a profit taking spot. It's not like close your position also.
Right. Okay, let's get into the large caps. NVIDIA.
NVIDIA is like the one large cap that I actually do kind of like. And it's strictly because you're coming over here next week. And it's the only stock that I'm like, okay, I have a catalyst on deck. What day are you going to be here?
Sunday night. So basically,
I will pick you up from the airport, or unless you're flying. Are you flying in SFO?
Yeah, SFO. A little too
Why would you fly into SFO?
Because there were no flights for San Jose. It was like, I don't know why your airport is so tiny compared to SFO. At least from Newark, there were no flights.
It's your airport. That's the problem. It's not
I
mine.
have one of the biggest airports in the world. You don't.
Yeah. All right. You could have done Oakland. I would have picked you up. Anyways.
About Oakland. No.
I might still pick you up. We'll see. You got to call me, though. Are we doing a stream from here?
We got to see. I think there will be a moment where all of us, you, me, Stock Talk, all have some time, but.
Okay. Anyways, I mean, these are the general lows on NVIDIA, just to circle back on like what we're actually doing here. It always gets bought up right around this, like as close to 70 as you can, kind of range. And after even this little dip, this is a higher low right now. I think the issue I have on NVIDIA right now is that if I were to press this or like take a net new position, I'm right at that first kind of like level of resistance. I would say 93. We talked about this before, is that other resistance too. But look, we have a catalyst on deck. There's not really a lot of good stuff. I would at least say for right now, this is not going to go down until we get to GTC. So nobody's really talking about it. At least that I see. I haven't really been paying a whole lot of attention, but this looks fine for either super long dated stuff that you're going to take profit on pretty quickly, or selling some short dated calls and puts, probably to keep it in this box. But it's also not enough to say, hey, you're going to go anywhere. So it's just one more lower high. I'm seeing an investor base build right over here. As long as we're holding this, all I can say that the charts are telling us is that it's slowly building some buyers. So buyers are slowly stepping in, and nobody's selling either. But it's only up to, they're selling around 195 or very close to 195. That's where they are selling. So the box is just getting tighter and tighter and tighter, like right in here.
Yeah,
So
I agree. I agree. And I also agree. This is one of the only large caps that actually has a catalyst, but that catalyst, if it gets faded, like the earnings catalyst.
Yeah.
Once again.
This is a buy the news, sell the rumor kind of situation. That's why I'm like, you got to be careful.
Yeah. Amazon.
What happened to Amazon today? Something about an offer?
Yeah, there was let me pull it up. There's something about Zoox, but then there was another piece.
They're self-driving.
Yeah, but you're talking about the debt. Yeah, so there was self-driving news, and then they're doing about is it 30 billion of debt offerings?
Offering at what I don't. So they're doing is it at the money or I mean?
Well, it's not equity, it's debt. So they're like they're bond sales essentially. That's what they're doing.
Okay.
And they're trying to raise another €1 billion as well in Europe.
So this was the last low right over here. My concern was that, people that had bought this here and here might sell into me here and here, which they did for a while, but it's not enough of a, like, if this goes down, it's like, okay, what are we going to go down to? Probably like here first, and then we'll bounce again. It's just not enough to be like, oh, I need to sell something. It's just where I'm at, right? It's pretty neutral, but as long as it can hold over, call it, well, today's high 215. 215 is really like the bigger area. This is I'm bouncing around timeframes, but from before, this near-term consolidation absolutely broke down. And so we were just kind of traversing down to this 190, which is a prior high area. So from over here. So this, as it stands, I mean, if I didn't do this, but if I did this, yeah, from here to here, that's a pretty stable pullback, filling a little session gap. And not that that matters. I wouldn't say that matters. But if Amazon is trending over 215 moving forward, what this chart is saying is that we could actually get back to like 230s. But that's, at that point, you kind of like have to know that that's going to be resistance. Let me just get a quick measurement. Not even just under 230s. So again, if this does hold over 215, I think that's what we're looking for. I wish I had more exciting news, but it's just not. It's not super exciting. We'll have to see how the market deals with this debt offering. I think when Google did the same thing, it was like sideways to down for a little bit, wasn't it?
Yep.
So it's not a new thing. It's just, what's interesting about it though is that the other story in the market is just like so absolutely here, right? Like the other story is that nobody is questioning the fact that people are going to be spending like crazy on data center buildouts. Like that the market is not questioning that. That's a fact, right? And so you're still seeing things like your Micron, SanDisk, which I haven't looked at today, hold up pretty well. Certain things might get expensive at times, like my Corning got expensive, and then it was 75 forward earnings or something, and then pulls back. But it's just like a pullback right now because the market is still not questioning whether or not the spend is going to be real or not. It's just the companies that are spending, are they able to make money before it's too late, basically? And if people like Google or Amazon can, offer some kind of crazy bonds at some point, it's probably okay.
Can we do Microsoft? As this one got hit again with IGV?
Yeah, so Microsoft's still kind of sitting in the same area. This is exactly like IGV. So from a Microsoft perspective, I think that first little counter trend bounce is there. Now, what I'm going to be looking for, I'm going to lock in a little bit more on Microsoft because I think this chart's slightly more interesting, especially because IGV is so down. If we get the bounce at the software level from a large cap perspective, this is the first one I want to look at. Because it is, not that it matters, but it's way, what is it from the highs? I mean, how much is this down? 30% from the highs. I don't know what it is down on the year, but 30% down from the highs is that's
a bear market. That's ugly.
Yeah, so that's a big one, right? So and our little double top pattern here has played out and then some. So I don't have to worry about this being in my way anymore because that's already completed. And I'm just kind of taking this high, that high, and I had these lines plus these longer term kind of support areas. So if Microsoft can hold, I'm going to say 392 and lock in another, or I might even be a little bit more, 392 to 395, and it bounces, this is actually going to look a lot more constructive for a if this then that kind of situation. So if I have the beginnings of another lower high, which is going to lock in under 400, and then I can get back up over 411. I think it's 404 actually is the main one. 404.24 is right here on my screen. This is actually going to set up for a better trade, especially when I think about this. We have earnings at the end of April. So I think Microsoft is gearing up for a little bit of a counter trend, or like, what do you say, pre-earnings bounce, especially seeing how like down this is. Let me just get a quick measurement on that. Like what could that could be up to. Yo, really? This could be up to 460. And if I want to be super clear, like not worried about it, like front running this, I have to look over here and say, if we're over 415, 416, I think that trade is on deck. So if Microsoft is trending over, call it 415, 416, basically over this area, I would open a new trade personally. This is very if this then. Probably something like this gives me a 1 to 6 risk reward, maybe in the near term or longer term, but we'll have to see. If I can get it to actually play like this, I would like to see this, but it's not there yet. So that's what I have to wait and see for. If I get super scalpy, it might end up being like this, but we'll see. But this one I would watch, especially if IGV gets does better. It's 415 is the major pivot from this prior consolidation over here. If we're trending over that, meaning like full days trading, entire days trading, it's on the mend. If not, we still have down to 370s, give or take, and then potentially lower if all things fall apart. But it hasn't yet.
Right. Oracle, by the way, guys, up 7.8% after hours. That one's still making its move. Did you like this going into the print on the TA? No.
That's 7%.
7.8.
Wait, let me get my microscope. Yo, what?
Dude, don't make fun of it. That's an 8% move.
Hey, this thing moves like 5% in any given day right now.
More than Grab has moved in a year, dude. That's like that.
I mean, I'm not gonna say anything about that one, but yeah, I mean, if it can hold, it's got some work to do. This thing is beaten to a pulp for sure. The prior breakdown is here, 178s. So actually, I could see this bounce up to that. These are pretty much done. And this was, I had as low as 115, but the downside target on Oracle had hit. And things are getting a little bouncy. So this is IGV patient zero, essentially. I think it's either this or CrowdStrike that's patient zero, which I haven't looked at CrowdStrike for a while, but this one clearly overdone, gives it all back and then some, all the way back to this prior breakout area here, which this purple line that we don't really talk about on my screen, I'll just make it a little bit bigger. That is a 200-week simple moving average, which rarely come into play. This is based on the weekly time frame, 200 weekly simple moving average. It's an important level to hold from a very broad trend perspective.
Well, the worst thing is they can dilute at the money on any big pump, which is scary if you're thinking you have a 180, 190 target. They're going to dilute way before that.
You think so?
I mean, the stock's been dead for almost 8 months. I mean, any sign of a real pump, I think they have to take advantage of that. They don't have money. They need the money.
Yeah, they don't have money.
Credit markets, right?
Which is like another little crack, right? Everybody's yapping about the credit markets right now. Do you have an opinion on that?
I'm actually preparing a deep dive for it, but it looks very ugly. Like, I don't know if it's catastrophic U.S. economy collapse ugly, but people are going to lose money in this, 100%.
Yeah. So I would say 168 on Oracle. That's going to be up to the 50. That's a counter trend bounce, par for the course. And it's right into this prior consolidation over here. So I don't know if you're still holding this from Do people have a cost basis over 170 that are still in this? I think that's the question.
I think most people are in the 200s, to be honest. Because
Yeah,
when
just
it fell from 350 to 200, people said, okay, 200 is a dip. And you can't blame them, right? But yeah, I think most people are in that 180 to 200 range. But if you're new to it recently, 140 and below, 140, 150, I mean, you're up, which is not too bad.
Yeah.
SOFI.
This is the credit thing, right? So like, I like SOFI, but the stock, I like the idea of SOFI and Hoodie, for that matter, being some that I could like maybe pick at to potentially get one of these like crazy bounces, but it's not working. It doesn't have any oomph to it. So measuring from here to the highs, so the last break, the last low here, we call this swing low. So swing low to swing high. I got to squish this chart so you see it. Swing low to swing high. There's like this little dash. 17 is like that perfect retracement that I like to see. But again, just because it's at my level, it doesn't make it like, oh, this is good. Like what I have to see once something gets there is I have to see buyers start to step in. And I'm just not seeing it yet. They step in a little bit. I don't see any major sellers or people shorting this. If they do, then it is down sub 14. That's what's happening. Probably deeper than that, but we're not there yet. This is very much like Hoodie at 70, maybe even a little bit higher than 70 equivalent. Well, actually, this is down 50%, isn't it?
Yeah, pretty much. I mean,
it is.
Yeah.
So I guess it is the equivalent. These are stocks that like IGV is beaten down so bad. It's just a bad sector. So here's the thing, and I had a question in my in our apprenticeship program the other day. It was like, how do I do? We look at sentiment a lot. There's three things that we look at. We look at fundamental analysis, we look at technical analysis, and we look at sentiment analysis to be a good trader. And you have to look at all three of these, like through these three lenses. And I might have a stock, say TTD, that I'm like, this is way low. I'm pretty sure it's a good price fundamentally. Technically, it should be at the lows. And I do get a sentiment catalyst that turns it around a little bit. But because of where it sits at the index level and because of maybe how bad it's down, it's going to be fighting the current like every step of the way, which is why we're not seeing like a massive move on TTD. Like leaps, sure. Like those were up like, I don't know, 70%. On that day, I think they're only up like 35% today. It's not a big deal. The Coinbase trade was like 1,000% trade, but it's not, TTD is kind of like, yeah, I'm not even going to write home about it. But that's where these stocks sit in, right? Like SOFI is financials. Financials not doing that great. Even if I like this stock specifically, I have to look at the other lenses of like, what sector is it in? Is that sector doing well? Like, how is everything going to go? So right now, what I'm seeing is it's gonna, not smooth sailing, and so I need to see a little bit more strength at the index level to really get excited about these kind of stocks, these fintech stocks specifically.
Yeah, and again, one of SoFi's partners is Blue Owl, which I think is upsetting the markets to an extent, even if that's not a good reason to be upset.
Yeah, but it makes them at risk, right? Like they might be good stocks, but in a not good sector, in a not great market. So it's like I got a plan to be able to buy it lower.
ONDS.
Until something changes. We're not even going to do Hoodie, huh? No Hoodie, no Palantir.
No, we'll do both. But
we're going to go ONDS first.
We got, dude, the defense names are hot. We got to give the people what they want. And I'm also curious your take on drones in general. Like, do you think they're appealing here as a hedge? Or?
No, like I was saying last Tuesday, like honestly, the only hedge I saw was freaking oil. What I'll tell you right now is that I think I'll see a rotation out of oil back into gold. So I would watch that specifically. Gold, I think, was up decently today, but oil now is too squeezy to really do much about. It's still not the oil stocks, but as we dip, that's really where I'm going to be looking at. ONDS is a no touch. It's not interesting. Probably one of the most boring charts I've seen in a long time. What are we talking about here? I think this from a technical perspective, stuck completely sideways. Downside 850, below 850. That has to hold. It doesn't have to hold, but that would be the low end of where you could think that it's going to be somewhat survivable for an upside situation. But it is stuck between 10 and 1150 right here. And you got a ton of sellers from this area, from this prior support, right? And from this resistance in here. So
it doesn't become the worst candidate for covered calls, but the name is a little expensive. So if I had to buy fresh shares at this level and then it ends up falling,
yeah,
that would be.
So I can only look at it from the technical lens. I can have a perspective on the sentiment lens, but I have to lean on you from the fundamental arena here. Yeah. Like whether or not it's expensive or cheap, I just don't know. I don't know it enough. Sentiment wise though, like we can look at Rocket Lab. It's still chopping below 70, tries a little bit. I like Rocket Lab, look at Kratos, look at whatever. The drones sentiment is it's neutral. It's not bearish. It's not bullish either because they've already run so much. It's super neutral. And so the issue here becomes almost like Palantir. I think Palantir was down today, but if what's been holding these up is the idea that there could be new contracts or new defense spending. And let's say we get a ceasefire deal, that makes them riskier. 100%. That makes them riskier. And so
Trump's literally been saying he wants this thing to end.
Bingo. So it's almost like I would rather be long oil for that thesis than some of these, because it's very much like the oil stocks. Like they're expensive. I know that. I'm saying that they're expensive. The one catch up is the commodity, which is so wild to say, and it's so volatile. It's risky. So I'm very much sitting on my hands still on a lot of things. I'll take some shots at some longer dated stuff, but I don't really want to be in the blast zone, so to speak. And it's a little tough. So I think still kind of like hold tight. These are tougher. Okay, so that's on us. Yeah, it's a no trade, so I can't give you a level. The level would be 850, 846 for the near term support. It's not, the thing is, it's not strong support.
Yeah, guys, there's Jason, we can look at Path real quick, but they have earnings tomorrow, so there's no real point given tomorrow.
I could say ranges. So like upside, I don't think it's going to be upside is 1460. That's your resistance level. And then you're basically at support. So, something like a Path, this would have gone in the, am I okay to go dumpster diving situation? I wouldn't have minded it at the lows, but here off the lows, it's like, on the absolute lows, you're up 16%. So I don't think this is going to get torn apart. I think a lot of things, and I'm not right a lot of times too, but down here as close to 10 or maybe even slightly below, that is your current support. So I don't know that there's a reason that this doesn't hold support if they don't deliver crazy numbers, and a typical reversal bounce here would take you to about just around 14.
Palantir.
I spilled my water. Palantir.
We don't have any Celsius? No Red Bull today?
Dude, this fridge is still empty. I have not. I just need to go and I just need to order something because I'm not going to the store. So this has got a lot of lines on this chart. What's going on here? So we got a little bounce right into resistance. I think I said 165 last time was the possible counter trend bounce. What do we get to? 161 and change. That's good enough for government work right there. That's it from the upside perspective. So that means you have to assume that you're going to go pull back a little bit. The lower level of support would be like 140s. So if you want to be constructive here, that comes from this guy and this guy, this area. You can see it right there. So let's say that's going to be your very near-term support. If this pulls in like this, expect some sideways chop around 140, and then you'd want to see it start to do this again. And that I think is going to be about assuming that that's the lows. Let's assume that that's the lows right now. From here to here also gives me a pretty solid area of support for a bullish bounce between 143 and 136.50.
I wonder if the war ends, does the premium they've been getting go away?
That's the question.
Yeah, that
it's
and
not.
It's software has been hurting them too.
Yeah, it's not in an uptrend. The biggest concern here would be that if this was prior support here, here, and here, well, are they selling on you? Because that's resistance right now, because you have prior support turning into future resistance is what's happening. We would call that an SR flip, support now resistance. So even this, I'd still expect it to go down again and maybe chop for a while. And it won't be until this is over 170 that this is like really in the clear.
Okay. Let's do hoodie. What are you thinking there?
I mean, it's I love these are like, you know, if the stocks are the boat, I think was an analogy I did, and you know the sentiment is like the ocean, the current, whatever. It's like hoodie's like my little speedboat, but it's speeding around in like choppy waters. I love everything that Vladdy's doing. Saw your interview, by the way, awesome job. I'm just waiting for you to say, like, dude, I have this technical analysis guy. And what do you think about it? You asked some trading questions. But
apparently he was an options trader back in the day, dude.
I believe it. I believe it. Who'd have thunk Vladdy's a trader? Kind of makes sense, though.
Makes sense, yeah.
It makes perfect sense when you think about it. Shout out, Vlad. If you don't like Vladdy, you're going to have to at me, because otherwise I'm just going to keep calling you Vladdy, which is short for Daddy Vlad. And if you didn't know. Anyways, so 71.92, just about $70 is that exact same level as the SOFI and the pullback. I think it's about 50% from the high. This is, or no, it's 65% from the high. This is like your technical retracement, a typical good technical retracement holds. We're holding so far. We're not over this 85, which is I think that's IPO high for IPO trading high, like the wick. So you know, take that with a grain of salt. Not a huge thing, but I'd like this to actually be trading well over the 90s. Again, a counter trend bounce on my hoodie here can take me to 111, which is where I see resistance. So from this perspective, I like being long hood equity, but still short some long dated calls, cover calls, if you will. Because if I was going to take this as a net new trade, I actually don't have a problem taking this as a net new trade here, but with a lot of time. So this would be like 3.5 to 1 risk reward. If I can get this around, 76s with a stop at these recent lows, 68, that's perfectly fine to me. And yeah, I like the setup, but it's not in a good sector. And so technically, hoodie looks like it's more ready than not to make a bounce. But the problem is the sector and the market that it sits in, it's in choppy water. So for those reasons, it's going to be choppy. If you like this, I think maybe if you can start looking at selling some. I don't want to say. I actually no. I don't think I would sell puts yet. I would just be nibbling at the equity itself.
But it feels like an accumulation year as of now, right? Like it feels like that 120, 150 range. It's going to take a lot to get there, but in years it will be well above that. So if you get to buy it, I think what people don't want to have is this thing goes back to 50. And I think you get that on a macro downturn, which mean everything gets hit, or a Bitcoin downturn. Without
but I mean, but let me ask you a question. Let's say hoodie goes to 50. What are you going to do?
I mean, you're definitely not selling.
Are you buying?
I mean, yeah.
I'm buying the shit out of it.
The question is why? If it goes to 50 on lack of earnings growth, which I don't see happening.
Yeah, I don't. I mean,
if it's macro, then yeah.
Yeah, exactly. So the only reason I could see this going to 50 would have to be macro or just general sentiment, which would be kind of a short, potentially longer, like lived
but
thing.
The point is, I don't think people want to buy at 79 and then it goes to 50. And that's where it's tricky in this range because it's already down 50%. So you would be thinking it's safe theoretically. But people on Microsoft down from 550 to 450 was safe.
Yeah.
And then
I mean, I would say if you like it, start nibbling at a position, but with a time horizon that's at least 3 to 5 years.
Yeah.
And hope to God it goes down so you can get more.
Yeah, no, I agree. I think that's very fair. AMD,
which goes with a lot of these things. I mean, or just investing in general. But it's the thing is like you don't want to premature allocation. We're not in a bull market. I'll just say that. And it's not time to go all in at all.
100%.
Yeah.
And the S&P is down 2% this year. It's not a bear market, but it's not a bull market either.
I'm still in the camp that we can see 500s on Qs this year. Did I ever give you that? Yeah, I could give you
last week. You told us that'd be the massive downside scenario.
Yeah. So AMD it's stuck, but yeah, I don't.
It's kind of like NVIDIA in a range. It's
just
AMD took a big dump from the beginning of the year from 260 to 200.
So AMD's story hasn't changed since we started looking at this more recently, since the little double top. 227 is still that prior all-time high, still absolutely resistance. 190 is like this. If this doesn't hold here, I feel like we'd have a higher probability of seeing AMD at 150 than we would see Robinhood at 50 if on a downturn, if that makes sense. So it's on the 200-day. Remember, guys, these SMAs, these 200-day SMAs, they're not. You don't want to think of them like support and resistance. What they are is like they're like magnets. So price is going to get drawn to them very quickly, meaning like it's drawn to the 20-day, whichever one it's closer to. If it gets drawn to the 50, that's fine. There's not support or resistance. It might go up higher because let's say if this happens, that's like, if it's a magnet, it's like polarity pushing it. But if it goes too far, they're going to pull it right back. And then it'll pull it right back and it'll pull it right back. Just like that. So don't, something, I'm just saying this because AMD is on the 200. That's not how they work. Not in reality. So I think this is a very small box right in here between 216 and 185s, give or take. The AMD will probably chop in until we get to GTC.
I agree. And I also think that GTC as a catalyst for NVIDIA, especially if they talk about the CPU stuff, although it might be seen as competitive, might actually help AMD.
Well, so that's a good point. Yeah, AMD's CPU is like money. But to rip and replace AMD architecture, to rip and replace x86 architecture, put AMD chips in theirs. Well, if there was ever going to be a time, this is it, because this is the generational data center build out kind of era. So this is the best shot at that ever happening, which probably makes sense as to why NVIDIA would go after it.
HIMS.
Were you long? I know we had We had some people that were long. Somebody called one of our members and was like, "Did you know that Jason said go for these HIMSS calls?" And I was like, "What?" On Technical Tuesday, I didn't say that.
Did you?
No, but I said what I said was, if you like it, take your $10,000 or whatever, put it in a drawer, lock the key, check back in a few years. That's what I said. But I mean, here we are.
Oh, I do remember you saying that. Yeah. I remember you saying the chart was shit, but if you like it, you buy it and you hold it. And then
it's here. That's
the
it.
thing the bulls have wanted for years happened on Friday.
It did.
And that's it. That's the story.
It did. It did. So this is another perfect example of like, it's similar to TTD. It's at support, technically ready to bounce from where it was at $15 or whatever. But it's kind of like, you know, if the stocks were the boats, this basically got its engine swapped out, but it's still got some patching to do. I think this guy can get up to as just underneath 30, which is where it broke down before, because where everybody else sold, where did you sell?
58.
You sell way higher.
Okay, so I bought at 55. I sold at 58. So I got a bit lucky.
Oh, amazing, dude.
But it was like 5 months of nothing. So, I mean, it was really kind of dumb to even get into it. But
I mean, it happens.
It just didn't have to deal with the downside. But a lot of people...
worse, dude. It could have been SMCI. You never know.
Yeah, the thing is well, yes. We all have those pain trades. But a lot of people, I think, started buying at 30 when it fell from 70 because a 50% haircut, people were like, okay, and then it fell 50% again. And that's what...
Yeah. So that's kind of like my
point. Before you continue, you have your obligatory weekly Chad comment.
I was gonna say Chad's back. What's up, Chad?
I got dinner with Chad yesterday, and he came to my apartment and he saw the painting you sent me. He's like, "Oh, Jason." Technically, I was like, "Don't you hate it?" He's like, "No, I love Jason. I just hate looking at the charts." I was like, "Okay."
Yeah. Well, because maybe these stocks are down. I don't know. I'm a Chad fan. How's that? And who's the other one that you? God, it starts with a D. Anyways, one of your other bros.
That hates technicals.
I mean, Davis.
Oh,
no,
yeah,
he'll come in and say some crazy stuff sometimes.
Unless you say something good about ZETA, he hates technicals. So.
All right. Well, regardless, I was going back to your point. I can see where everybody bought on the charts right around this $30 level between 29 and 73, right over here. It's just slightly over the 50-day. Again, not a big thing. If we do get a little bit higher at that point, that's really where I would be concerned. But if you snipe this low right here, here's what I'd say. Similar to a TTD, I don't know that we're ever going to see these prices again that low because they were pretty low. Unless these companies are legitimately busted and legit going to zero. And if they are, well, I kind of knew that going in if I bought it down here. That's my sentiment here. So like I would kind of just stay the course here. Hopefully you bought enough. But I wouldn't add, not yet. And if I saw these lows again, I would actually be more concerned than not.
Oh, if it goes down 40% after this Novo thing, something horrible is happening.
That's my point, right? So I want to see like strength over 30 to get really excited. Any little dip here is kind of like nothing burger, especially as an options trader. It's not going to get me excited because 40% move, your volatilities, I'm just going to assume through the roof. I have no idea. But some sideways action for a while, I think will be it should be expected. What I could see here on the charts is like just under 20, call it like 1940 is a pivot. That would be giving about 50% back of this move. But again, right over here underneath 20. I wouldn't get concerned with that. I would get concerned if we're like back in the low teens, mid to low teens. I'm like, all right, this thing is broken. The shorts are back after me. I'm probably in trouble.
Let's do TTD real quick before we get into the audience requests. So this one, Jason mentioned it last week, I think at 18 as a flyer. He bought it. You bought options, right? April calls, I think.
And shares. I bought leaps.
Okay. Stock goes up 30% after an OpenAI rumor and the CEO buying 150 million of it.
Yep.
So my big question, and I'm going to guess before you answer, is did you sell? And I'm going to guess yes, you sold a good chunk of it.
I didn't sell a damn thing, dude.
Wow. I would have thought you were like, oh, great. I got a big win this year. I'm out.
No, because first of all, it wasn't that big, because just like HIMS, you know, it would have needed to be done within reason, right? Meaning from a size perspective, there's no way that I could have gone like, oh, this is the one trade, I'm going all in. It's not happening, right?
No, not that your positioning was big, but your options had to be up double the day after that move. Like,
dude, you know how often I double my money on options?
Okay, all right. I didn't
literally every day. They were doubled. But like I said, the Coinbase chart trade that we outlined last Technical Tuesday did 1,000%, literally 1,000%. But TTD, 75%.
I mean, that's still money off of an insider buy. I don't know. I feel like I take that. So okay, so you think there's more momentum left in the name, basically? I
think like it's the same logic I have for HIMS. Like it doesn't have the same catalyst as HIMS. Like, granted, that's not the same kind of catalyst. You know, I'm happy here.
I mean, there's no catalyst.
Nah, that's what I'm saying. Like,
that's what I'm saying. The catalysts have happened. The move has happened. So I'm just.
This is more of like, I'm still okay doing some dumpster diving in IGV if we get the bounces. And I think the bounces would be the most aggressive on a TTD or HIMS because they're just so egregiously low. But the way that I have to do it is I have to be reasonable about it. So it's kind of like you take your shot and it's either going to work or it's not. And I have the technical reasons for it, but I also expect that there's going to be some kind of, you know, rough going for a while. Will I add? No shot, right? Will I close it? Probably, if it really stops working for me. But that's exactly where I'm at. This was the area.
Congrats. It was. I mean, it's some of these things you don't expect, and then they happen, right? So
that's trading, right? So trading is like we're always trying to like position ourselves to be in the right place at the right time to look lucky. And, you know, it's you right now, but most of the time when people ask like, how did you do that? I'm just like, well, I'm just lucky just because it's easier to say that than go through this whole rigmarole of how, you know, we saw this, we did that. And then I wanted to be in the right place at the right time. They wouldn't believe me anyways. Also true.
Okay, let's get to 2:30 on the clock. We will start doing a bunch of these audience requests. We could start off with MRVL, and then I know Circle is a big one for a lot of people.
Yeah, so MRVL, oddly enough, as I was going through and I'm kind of shifting my portfolio around last week, I put a trailing stop on MRVL. Didn't get stopped out, but I was getting very frustrated with this guy because it was just like almost like dead money. And luckily, it worked out. I have to 100 where this usually gets sold into, but I think I'm happy with MRVL. I didn't hit play here. It's just I've danced this dance with MRVL more times than I can count. Literally exactly this. I'll buy it, I'll nibble it below 80. Whenever it's below 80, you can nibble. This last time it was going sideways for a very long time. Ends up working out, but it never really holds over 100, which is really what I'm trading for a lot. I would want this for a lot more. So I think the sentiment that I've always had on MRVL is that it's a longer term play, and you probably should be more patient with it. So I'm not going to change that statement here, but from a technical perspective, I will still say this bad boy has been at 100 a couple times before. If this third attempt here, like if this is like, you know, I mean, it depends on how if this is 1, 2, 3, if this is a fourth one, cool. But then we should probably see 110, potentially 120s. That's where this is trading for later, but I need that broader sentiment to turn around with it. I think it's got it's underrated. It's been underrated forever. It's always been underrated. Does it get like that premium? TBD, right? Again, I've danced this dance with MRVL for for the last year straight and then some. I like it, but she needs to show me some serious strength. Long term, in the near term, for me to think that, oh, this is it, right? Long term, I'm fine. Would I add here? No, just because it's into resistance. But after this earnings report, what is interesting, and I'll zoom into this one more time, is that here's the earnings report right here. It dips down, we get a little bit of a beat or a little bit of a rip. If this is not holding, I would call it 86s. It's probably coming all the way back. And until then, a lot of times, whether it's Micron, whether it's GLW, when you do get this kind of push to the upside, I mean, what we can see sometimes is just a whole sentiment shift on a stock, and it just stays in this channel for like the foreseeable future, which that's what I would like to see happen from MRVL. So in the meantime, this is like 92 to act right, but it has to stay in this. It has to hold that trajectory for it to continue to act right. And I do know that, look, we're coming into resistance right around here. So a little bit more cautious than optimistic, but I don't not like the stock at all. I think if the market does give it a good turnaround story, it's going to be a good one, but not one that I would expect to be like, oh, it's good tomorrow. Next.
Okay, before we continue, we got a Trump tweet. America is returning to real energy dominance. Today, I'm proud to announce that America First Refining is opening the first new U.S. oil refinery in 50 years in Brownsville, Texas. $300 billion deal, massive win for the American workers and people of South Texas. We will deliver billions of dollars in economic impact and will be the cleanest refinery in the world. It will power global exports and bring thousands of long overdue jobs and growth. This is what American energy dominance looks like.
Nice. I thought you were going to screen share.
Oh, no. I was just reading off my phone. Circle, which has been the best crypto play all year, apparently.
Oddly. I know some marker was trading it, but we had to this is the average weekly range is what we hit today. It did get to, no, it's right there. So this, I had on the chart that's from way back. So hold on. She looks good.
Dude, 50 to freaking 112. Not bad. It has nothing to do with Bitcoin.
No.
Right? Like,
but it's the Dixie equivalent of the crypto sphere, of the cryptoverse, isn't it?
yes.
Pretty sure it is.
I mean, that's a good analogy.
So it's not really bullish Bitcoin from that perspective.
It's bullish treasuries, I guess.
Yeah, it's the dollar equivalent in the cryptoverse. I mean, so this is whereas I think you got a big move, 103 to 117, give or take. It was in the cards once we had this. We had this break over here at 91. I would never have caught this at 50. So congrats to anybody that did. No shot I would have. Reversal at 65. And you have some continuation here. So what I would say is you're at another critical turning point for Circle. So I'll give you a couple. What we call like a fair value is going to be 138. This is very extended. So I'd be very cautious right now with little to no pullback. I want this to hold 116. If it's not holding 116, we have a trade down to 103 like that, which is essentially what it's done in the last 2 days. But if it can, then your next stop is 138. So like if it can hold this and it does a little something like that, then you're going to 138. That is also in the cards. So if this, then that. And then if it can do that, then we're talking about bigger things. But one step at a time right now, your next level would be the 150s. But again, at that point, if you're long anywhere sub 100 at 150, you're over 50% green. So you probably don't want to press that upside either. So a little bit more, but it looks good from a trading perspective. If you have a fundamental thesis, it's a whole different deal.
Nebius.
What are we doing here? I still never texted you. I still don't think I'm going to. 108. Dude, if you I still have yet to do this. If anybody in the chat has been running these condors or cover calls and cash secure puts on Nebius, this has got to be like the best chart right now. Yeah, this has got to be like so juicy. So, I mean, I would continue to do so. I would continue to do so up in this 115-ish area resistance, and then down here 70, 65-ish level for support. Literally right across. I'd probably do longer dated at this point. Just careful, you have earnings coming at the end of the month. So potentially up to 108 again. If it doesn't get through, slap some upside short calls on there. And then if it pulls down to 76 and holds, slap some downside short puts.
Yeah, and again, with the
bearish calls, yeah.
The other reason I like the short calls on Nebius is because for Nebius to move, like, and I know the Nebius bulls think there's like a lot of parts of the thesis, but realistically, NVIDIA's got to break through 200. Like, you need a massive move on Oracle, NVIDIA, et cetera, to get these data center stocks to pump. If that's not going to happen, and people are still willing to pay heavy premiums, you can just keep reducing your cost basis every week.
Yeah. So, I mean, the 71 or 76-ish area right here came from a pretty typical retracement, but the resistance here, this is a bearish retracement here. So again, you're stuck between the bulls and the bears, bulls being a little bit lower, bulls being down here, bears being up here. And this is the range that it trades in. And I don't expect this to change. So if you can get some short premium, this looks great.
IREN.
Was this what happened? $28.
They announced a $6 billion dilution last week.
Well, that was into your resistance or your support level. This is kind of like high beta. I don't know what the float is on here, but it acts like a low float stock. I don't know if it is a low float stock or not. 42, I think, is currently your resistance.
It's about 330 million shares outstanding.
I don't know if that's a lot or not, but just about 42 is resistance. So this looks like it'll probably retest that again. And if it can get through that, this is a stock that could do something like this pretty quickly. So the trade becomes over 42 up to 56. That's a tradable range. Otherwise, it's taking a chill pill. It looks like it's napping right now, but this area below 35, below the 200-day, as close to 30 as you can, has to be support. I mean, would want it to be support. If it loses that, look out below. But I think it's kind of colty. So like, I just feel like there's like a weird following behind it. So like super near term, and they day trade the crap out of these things. I'll tell you that much. If it's holding 37.5, it's probably going to go into the 42s. These are very small, not really make a lot of money. There's a day trade kind of range here, like something like that, maybe. But a bigger move could be probably into this area right here, into the 52s. I could possibly see $10 in this from here up to here as a legit trade. That could happen pretty quick if you get like a squeeze on this guy.
CoreWeave.
I'm so scared, dude. What's going on with this stock?
I don't know, dude. Their earnings weren't that bad. I mean, the debt is ugly, but still.
Oh, it's not bad.
I mean, the majority of the hit was after
Buy it.
last week.
Let's go. How much do we need? I actually like it. This looks good. Not gonna lie, dude. What are the odds? What are the odds Jensen mentions CRWV at GTC?
Like 99%.
Can we just
There's no
go
way
long?
he's gonna pump every.
Can we just go?
single-
Is this? Let me ask you. Is this not the most like obvious trade right now? Then
Look, I feel the
support
same.
is holding very well. That's what I'm looking at. Right. Support is holding well, and if there's not enough sellers to get this lower, it's got to go higher at minimum to get more sellers. And if this area is not enough, dude, I really don't hate this chart. I did not expect to see this look like this. Sorry.
So technically, I think you're right. There's some weird things going on with their debt to equity, the ability for them to supply their backlog, and all that stuff fundamentally leans me towards you just buy more NVIDIA. But CRWV can get back to 100 way quicker than NVIDIA can get to 200. And I mean, it was at 100 2 weeks ago. It was at 120 or 115. So
yeah, CRWV can get to 110, like poof,
yeah.
blink of an eye. And NVIDIA might be at 193. So I'm like, I would put this in the category of speculative long. So again, high risk, very high risk, very high beta, which means I can't really throw a lot of money on it, but earnings are behind us, way behind us. It's not making new lows. It's had a couple attempts to make new lows, just one, what day is this? Monday, as well as the Tuesday before that. I got 1, 2, I mean, it's a triple bottom. I don't know if that's a thing. But I mean, if this gets over 80, for sure, it's going to near 90 because I have a pretty heavy volume profile. But I think this is a low risk tradable entry, quite frankly, because I have a very clean risk to reward. Even if I were to do this right here, dude, somebody call Jose. Well,
Jose, part of the reason Jose loves it is because NVIDIA loves it. You know, NVIDIA does not want these guys to fail at all.
Yeah, I would say I would cut this short from a trading perspective before 100, like 95. And I would have to have a stop below 70. So it's 1 to 3. It's actually pretty basic. But I don't hate this actually at all. I really don't hate it, dude. Especially with GTC coming. I'm gonna go ahead and slap a buy on this. God, watch it go down 20% tomorrow.
No, it's got hit hard enough, dude. And with Oracle earnings, I think it should be okay. Tesla.
Hold. Not surprisingly, not breaking down. I almost feel like this whole $100 gas thing is like bullish for EVs. Oddly enough,
dude, I think so. But how many people are realistically going to spend 45 grand to buy an EV because of?
Listen,
gas?
I bought the most inefficient EV that you could possibly buy. Like you couldn't try to buy a more inefficient EV than the EV that I bought, and even still, like if I had PG&E here as our utility provider, if I didn't it would probably still cost me at home, I don't know, like maybe $200 a month to charge it. But if this was a gas car, it would be like $500 a month to drive it around.
In California for 100%. That's, I mean,
yeah, easily. But it's not even going anywhere. So I don't know. I think this is being held up by probably speculation of SpaceX IPO. And I don't know that the gas thing is real. It's just me putzing around, but it's not over 415. That's also true. It's holding right now. It's in a very tight holding pattern. Tesla, when Tesla goes sideways, it can go sideways for a very long time. We will know, like, I don't know if I was on your channel or not, but I will know when Tesla's ready to go, because she's selfish, self-centered, self-seeking. And when she makes a move, she does not let anything else move. Everything else will be down, and Tesla will be like bright freaking green, and because she steals the spotlight. And until that happens, it's not happening. So she's warming up for something.
Sounds like you got something against Tesla, dude. Goodness. I mean,
No, this is like my most profitable trading ticker of all the tickers. If I add up all my profits, Tesla's it. But over the years, and it's because I know its personality very, very well, like very well. And you know, if I'm going to say
she has been stuck. Just like NVIDIA.
My most profitable ticker. I've also been saying stay away. She's stuck. For how long? Like from the day she started to get stuck. Like literally from this moment, I was like, no, like we're chilling. We're good. For 160 days, I've been saying the same thing. And what's happened? Nothing. So my call's been right. Not to, I'm just a trader, right? But this is one ticker that I know better than most. You know, it's got a little bit more downside risk, but she's being held up for a couple other reasons. She needs a catalyst is what she is. Once the market has something really juicy to look forward to, it's gonna be on and cracking, but there's nothing there yet. It's all kind of like,
what is the last Tesla catalyst we've had? And don't say earnings.
So outside of earnings. No, earnings is never a catalyst for Tesla.
Yeah, so what was the last
Elon going to the White House? It's you know, Optimus bouncing around San Jose.
No, but what, can you remember what the last actual catalyst was?
Cybertruck. Was it Cyber Day? What do they call it?
That was in like summer of 25 or 24, October of 24. You mean the iRobot thing? The Wii robot or whatever they called it?
No, they do it like it was a big to do.
Oh, you're talking about I know. Yeah, it was kind of, it was the investor vote. And I remember Elon was live. Yeah, that
investor vote is a catalyst. Yep.
That's when he got his pay package approved. Yeah, so since then, basically 7 months, we haven't had
any new catalyst. So that's what it needs.
Yeah, and Elon bought shares in November of last year as well.
That's not enough of a catalyst, but like the shareholder vote, that's a catalyst. The cyber days are catalysts. Earnings are never catalysts for Tesla. First of all, you don't own Tesla because they sell cars. Like, what are you doing? That's not why people own Tesla as a company. It's a proxy to Elon. So watch Elon and watch, you know, energy and the whole nine, and the robotics.
Reddit.
Okay, I have not looked at this. Last time I looked at this, I'm pretty sure I said hard sell, and it bounced here. I don't like this. Still,
there's a lot of people that are excited about the fundamentals of this. I'm curious if the fundamentals were legit, does the chart, in your opinion, look reasonable?
No.
Why?
Technically speaking, when you lose this retracement from this swing high to swing low, or swing low to swing high, when you lose that retracement that I keep outlining, whether it's hood or SOFI or whatever, when you lose this, you have like a 70-something% probability to give all of it back. And so in this instance, that's 112. So you have from 150, you had more of a 70% probability to go back down another 30% than you did to go up $25. Technically speaking, from a TA statistics situation, that is why.
So it's not compelling for a ride back to 200, as people are saying.
It's compelling for a short. I'm not joking. From a technical perspective, and I missed, you know, it would have been from here back down to this 115 area or 120. But you know what happens to stocks when they lose 120? I was really worried about my Corning. It didn't lose 125, but if it loses 125, she gone.
But are you saying this is a decent entry given its support?
I'm saying horrible entry.
Oh, it's a horrible. Okay, so what
It's
you're
a
looking
sell.
at? Well,
It's a sell. Yeah. It from a technical perspective. Fundamentally, couldn't tell you. So technicals don't take fundamentals into account. Technicals, for that matter, don't even take sentiment into account. So sentiment can change. Fundamentals could be bullish. Technically, all this is saying is it's not ready. Wait for lower. Technically speaking, wait for lower. At
would
least
100 be lower or 120 or
test the 120s, right? If it can do the 120, look at Palantir, held the 120, 125. If it holds it, they're good. They're good levels. I don't really want to say $100 even number. It's not a big deal. Because if it loses 100, I mean, we know it's going to 75, and that is exactly what I'm saying. That's the lows here. For now, here, I'll give you this. You have another retracement level, which is going to be 786. Also gives me 119. So you should see 119 first before you see 155 again, technically speaking. Plus, I have confluence from volume profile here. We should see this. Yeah, sure. You got a little death cross, but it's not. I'm not seeing the buyer step in just yet. If it's over 155, I'm just wrong. But and it's a long into 180. But that is right there. That's the if this then that. If it's below, if this is below 145, then we should see 120. If this is above 155, then we should see 180.
okay. Rocket Lab.
So I actually had some upside trades on this, but from an option perspective, I was just getting burnt to a crisp, so I had to close her out. I got a little bit out green, but this is a good spot. She's taking a big time breather, just because sometimes like where this is out of the downtrend. It's out of the downtrend, but it's holding. So I think it's very much like the it's the drones being neutral, similar to your neoclouds, somewhat neutral. It's defense being neutral to just neutral to potentially bullish, but right now more neutral than anything. Not bearish. If it does come down, this $60 level is your next area of support, but it's not. It's holding. So it's neutral. It's just neutral. So many sideways stocks. It's been sideways for how long? 35 days.
Mid-Jan, I would say.
Yeah. So this 74 area is what I needed to see it get through. So it kind of tested it when I took it last. So I took some upsides over here, and I need to see it hold over 74. And so the fact that it didn't, it was just like, and then today it tried again, but it locked what we call a lower high intraday. So to me, that's like, all right, well, you need some more time to breathe. That's what this is telling me. So until this is over 74 or really below 78, in this little box right here, it's kind of just a watch, don't touch, or sell premium. It is sell premium. But the two trades that will come is below 68.50. Cool. We go down to 61s. Above 74, we have up to 80, potentially into 85s. But it needs that if this, then that. But that is your if this, then that. If you're out of this box, then you go to either one of these levels. And you react when it does. This is not an anticipate situation here.
Okay. ASTS.
From a trading perspective. What was it?
ASTS.
Should be similar. Yeah. So this one, I think, had in my mind, I might have been daydreaming, but it had like maybe a potential to get the AVAV contract. I don't know who actually would. It's like antennas, the SCAR contract, but 105 was the upside on ASTS. 89 is downside. You're actually slightly below. So if you go any lower on ASTS, the support level here is 76.5. And so I would expect to see that. But in between that, here and there, unless I get that, it's going to be stuck into 105. So it's a pretty big range. It's tradable. 17%, $15 tradable range.
Yeah, it's been stuck in that same range.
Yeah, so if we can get back over 89, then this becomes tradable up to roughly 100. That's a good trade. And then below 88, you also have a trade down to 76. Also not a bad trade. So it's about to make a move. You used a couple, like $1 one way or the other from here, and you're ready to roll.
Got a headline from Microsoft. War Department designation of Anthropic as a supply chain risk directly impacts us. Microsoft now is backing Anthropic on their lawsuit against the DOW. Wow. I mean, if Nadella's doing it, I wonder if Sundar joins and backs Anthropic as well. I wonder if Jassy joins because he's got.
Jassy would dude. Jassy'd be all about it. But like, why are they doing this? What's happening?
Well, apparently, if Anthropic's seen as a supply chain risk, Microsoft's integration with Anthropic, I would imagine, is pretty freaking massive. Would not help Microsoft. Maybe it doesn't hurt them as bad as Anthropic, but
no. But what was the problem that Trump had with them?
Anthropic was basically trying to say, if you want to use our stuff in certain situations, you have to consult with us. And Trump was like, I just want to use it. And they were like, you can't just use it. And he was like, all right, screw you guys. I'm going to use OpenAI then.
It's not being like they're like super liberal company though, right?
Well, I mean, Nadario's definitely a Democrat. He is more liberal, but he is.
You can ask Claude if he's biased that way, and Claude will tell you he is. It is.
His claim is the government's doing it for unethical reasons, and the government's like, dude, we're using it for lawful, things that we have to do and you don't need to know everything we do because it's classified, and so it's the back and forth.
Yeah.
But I never thought of the big tech companies supporting Anthropic. Also, logically, Anthropic's valuation is going to get not nuked, but it's definitely not going to hold up as easily if they're losing billions of dollars in potential revenue. So Jassy, Sundar, Nadella, they might all have an incentive to, help them out in the lawsuit.
How does it help them?
Well, because again, if they're a supply chain risk and Boeing or all these other contractors want to use them, but the government has said they're a supply chain risk, those companies don't use their.
They can't use them if they have contracts with the government.
Correct.
So it's like the workaround. It's like, oh, you can buy SMCI China, and we can put these NVIDIA chips in the SMCI boxes. It would like, oh, okay, Microsoft, Amazon, whoever can have contracts with the government and resell their Anthropic equivalent. Yeah, I get it.
And Microsoft's basically saying it would be hard for us to resell it if they get classified as a supply chain risk.
Yeah. Microsoft, I think, is.
No, I'm not going to lie. You have been under a rock. I'm surprised you haven't kept up with.
No, because I'm like, just like, there's so much going on right now. Like, it's not, this one is probably not like on my, it doesn't affect anything that I'm trading. Like, yeah. and I make a pretty like conscious effort to stay out of politics and religion. Very, very conscious effort to stay out of those two things.
Okay, last two space names, then we'll move on. Redwire and Planet Labs. So PL, we could do RDW first and then.
Oh, I'm all Radware. I used to work with this company.
Radware?
Yeah.
Dude, you used to work for every time you go to a tech.
Not for this company. I sold a bunch of Radware app firewalls, application firewalls to Twitter when it was Twitter. It was like $10 million worth of their shit. Hold on.
Do you know the company that you were hating on 2 weeks ago that you called a really good short on? Do you know that company basically was the godfather of the modern database?
Yes.
IBM?
Not only database, like almost everything. Did you know that they invented email?
I was like, wow.
Did you know they invented email?
IBM invented email?
Lotus Notes.
Huh.
Yeah. it was the first, I don't know if they invented it, but like that was the first real Microsoft Exchange took out IBM's Lotus Notes.
I'm just repeating Chad's talking points. Trying to sound smart, but wow, Lotus Notes, huh?
And Lotus was around for so long that I was doing migrations off of freaking Lotus, like at a certain point in my career. Like it was brand new, granted, but like, geez, I mean, yeah. And it's not that like it's if you don't know like the COBOL, like the language is built into probably like 75% of the S&P 500 or top 1,000 companies. It's actually still there. It's in a lot of them, and they charge. I'll just put it to you this way: one single mainframe instance in AWS used to be about $50,000 a month, one per month.
Well, Chad told me originally he worked under the guy who like built the modern database, and so like when we talk about data centers, he was there back in 03, 04 with like cassettes plugging shit in to a data center.
Oh, dude, my mom used to like do punch cards as coding, like literally punch a card and stick it in a machine as code.
It's such a different world, but like data centers aren't new. We've had them on-prem for so long. It's just now we think of them with GPUs in them instead of cassettes and what else used to be in there.
Or like the big reels that you'd slide on.
Yes.
Like the.
Yeah. Okay. Redwire and Planet Labs. What are you thinking?
These are both drone stocks. I mean, Redwire had an issue with the SPAC stuff. So like, it's going to be, I mean, I don't know what's going on. They had some kind of issue, but it should be pinned around $8. And then any kind of speculation is a good company. They do great work. That's what I know. But it's very high beta. So I'd say like below $8 or thereabouts is usually support. You can kind of see that on the charts around here. And when they get some bounces, they're going to be short-lived in the near term because it's such a small name, extremely high beta. Planet Labs, probably same thing. I don't really know. It's not the same thing. I don't know this company at all, so I really can't speak to it. Just from a trading perspective, this has to be from one of our charts. Looks like I had a $30 target on this at some point, which has been achieved. Actually, this does not look like a long. This looks like a more cautious. This has to get back over 27.5. Otherwise, 23.16. This is a little gray line, 23.16. If it's below 23.16, you're actually in more trouble from a technical perspective of getting below 20 again. And that in here would be your support. So call this resistance right now, and this support right over here. You're closer to resistance. That's my thing. You're closer to resistance than not. If I were to take this here, I can already see it. It's right into that bear zone. So I have confirmation there that that's a bearish bounce. But if you can get through, I'll just give you this here. It's targets in the 40s, but this could pull back to 21st. It's possible this could pull back to 20. You don't want this below 1990. Then it's all over. But this is your support for now. That's your resistance. If at some point you actually do get this, that would be the trajectory. But right now, this looks like not ready. Unless there's some kind of catalyst, which could happen, and I don't know about. Again, strictly technicals, it's at resistance.
Okay, Meta.
Meta had a better day today. So I think last time I was looking at this low 630s, it's holding. I don't like how many times it's tested this low 630 level. Are you watching this thing?
It's almost like every week it touches 629 for a little bit. and then jumps.
Meta. Yeah, so this was similarly like this is that level it has to hold for this trend to really stay even somewhat intact. Otherwise, we see that sub 600 again. And in the near term, the trajectory is up to 690s, just under. So that's like from here to here. And when we do get there, this is going to be resistance, this little downtrend, and it's going to be a bearish retracement up into 715. Oops. Here. So that's going to be where you want to sell calls, upside calls if you get up here. Or maybe even up just under 690. But this is where she lives right now. She's trying to make it her home, but we'd rather her get out of this home, quite frankly. But this is going to try trajectory up to 690s. You just don't want to see this below 630 for any considerable period of time. You got earnings coming at the end of April. Possibly we see a little like pre-earnings run up. That's kind of what I would be expecting. I don't hate Meta at all. It's tried to go down lower, but the bears again have failed to do their duty. And yeah, if they can't push it down, then it's got to go up. Well, it doesn't have to go up, but it's here. I don't see any selling just yet. This is like creating a very, very heavy congestion zone for the foreseeable future. This is either going to be big time support or this is going to be big time resistance in a year from now.
App 11.
APP. I did this on my stream. Monday, someone requested this and I had exactly this. So this is resistance. So it was like, don't chase this into this area. I want to say long.
Dude, this thing goes up and down 8% every other day. Like, I
Dude,
don't know.
Did you hear the tickers that you're having me go through? Those things go up and down like 10%.
No, but this one, everyone's saying is an obvious buy. And I'm like, I mean, growth
technically, you're much better now. As long as it's over 406, you're much better. You didn't want to buy into resistance. So below 470, basically this area becomes the equivalent of Meta's 635 right here. So 471 will be the equivalent of Meta's 635. If not, then it's down to 406, but that's what you kind of want to see. So it's an expected pullback right now. Oops. The thing I have to gauge here is like, what is your upside? And so like the upside is potentially 590s from a technical perspective. I don't know where that puts you into fundamental land, but it's this area here. It's 550 up to 595. That is your resistance in this little area. So, I mean, that's the issue, is that there's not, unlike some of these other stocks, like even if I bought this here, my upside, 17%. Yeah, I mean, if that's worth it for you. This one, for me, I don't know if it's worth it or not, because I'd have to see what the spreads look like, but from a trading perspective. But this is, it's not horrible. You just gotta, you don't want this below 400. I would not buy it below 400. If it's below 400, that's like Reddit below. It's the same thing as Reddit.
Sticking on advertising, ZETA.
Oh, I thought you were gonna go Shopify. ZETA.
Again, I think this one's just getting hit because of software. The earnings were freaking phenomenal.
Yeah, no, I think it's the same thing. It's like you can have a great company, but you have to kind of look through all those different lenses. Like software is not ideal right now. You can get bounces, but the bounces that I feel like are going to be the most trade location matters. Like the bounces that are going to be the biggest ones are probably from the lows, but you have to be careful. Like, am I buying a broken company or not? If this can hold 1780, cool. You can have your trajectory back up to the 20s, but 20 and change. But this is short term, 21. Long term, which is, if you like ZETA, I think you have to like it long time. Like, I think ZETA is more like disinvestment stuff here. Below 15, below 16, if you like it, I think that's going to remain support for a while in this area right here. Yeah, that's where I have this. But it's still stuck into this mid to high 20s.
My perspective on this is, if you believe in the thesis, this is where you acquire, because once this software overhang is gone, the names that aren't getting killed by AI and that are growing, like a ZETA, I mean, they're going to break out. This thing was at 25 in January, so it's just
yeah. So to translate, what I'm saying is that if this is where you acquire is as close to 16 as possible, if not lower.
Yep, I 100% agree with that. And the lowest we saw was like 1450 last week. And now we're at 19. Rivian. Well, we can do Shopify because you want to do that first, right?
Okay.
We'll do Shop, then Rivian.
Ooh, Shop. I wanted to look at Shop because, like, I'm like, I know this thing got beat up. And I had the Shop to like 109s and I didn't pull the trigger. It's also looking better. So like some of these IGV and IGV, the sector itself also, they can pull back a little bit. Again, we got to get through this week or really just tomorrow. But like if this is trending over 126, it looks better. 109 was support here. And I kind of want to see that a new support level show up over 126, which is, this comes from over here, right? Generally speaking, over here, and this area right in here. So I'd like to see this act as support, maybe go sideways for a bit, have the 20-day catch up, and then if it can get back through, this one would have some serious squeeze potential. What's this earnings? Earnings on end of April. So we got big earnings coming in sooner than later. And that would be into the 150s. I like this on dips, but you have to be patient because she'll fake you out a lot. She does a lot of fake outs on Miss Shopify here.
Okay. And Rivian?
Rivian caught an upgrade today. I don't know if it was meaningful at all, but I mean, I like Rivian below 15, below 14, whenever. I didn't sell anything. I think it's like a transition year for Rivian. I think that no matter what analysts say about this stock, like, look, they're probably going to have to raise again at some point. I don't know where the price is going to be at that point. This is support right in here. The low end of that support being 13. You're out of it right now, so you'd rather be a buyer in support. You're not over the 200 week yet. This can get over a little bit higher, but for me, Rivi's like, you know, it's. I think this is going to be a 2027 story. You know, their Autonomous Plus isn't going to be anything close to the new version of FSD. What hardware version of Tesla do you have?
I think it's V4.
Oh, so you have the best hardware on Tesla. The thing about that I like about Rivian is that the way that they built the cars, if you are a Tesla owner, you probably know there's V3, V4, V2, whatever hardware. Rivian didn't do it that way. They've been more expensive because they like loaded up on hardware from the gate. So it's not supposed to be that way. So as they get better software, which it's not as good as Tesla, but as it, you know, Tesla's not going to be the only one at the end of the day. this is kind of a car company, and also Tesla's not, it's more robotics. But anyways, I think that 2027, after we see what R2 can do and the potentially R3, which comes out this year, you get some speculation into this area. 23 is resistance. I think this is the general range for Rivian, but very headline driven to me because of all those things. I think they're going to have to raise. I think it's got a lot of upside potential from a percentage perspective, not like big macro or anything, but they're not going to outsell Tesla, but from an upside trading, investing thing, I think it could be a crazy move. 2028, 2030, whole different story. That could be like, 50 plus. But we got to get through this year and the R2 launch and subsequently the R3 launch and the build out of the Georgia factory first. Okay.
And this was the inefficient EV you were talking about.
No, I bought a Hummer EV.
When?
What?
Was this recent or this was a while ago?
It's a while ago.
Like a year ago?
No, like it's December, because I can't get my R2.
I feel like
I'm gonna get R2. Huh?
You told me this, but I forgot you did this. Did you not tell me you got a Hummer? Hold on, I'm gonna search our text for Hummer, see if anything pops up.
You know what I texted you? I texted you, dude, I got a 0% interest offer on
I see it.
And I was like, should I? So just so you guys know,
I said yes. I said
bought this car because Amit told me to buy this car. So I was like, well, why not? Literally, once you replied yes, because it was a question. If you scroll up, it was like, should I do it? I was literally asking.
Well, you couldn't get the Rivian and you didn't like the Cybertruck, 0% APR. I was like, oh, I guess so. Like,
how are you not going to do it? Right? How does it make sense?
Yeah. Okay. Everyone, please make sure to follow.
120,000 later. It's like, really, dude? I don't know. I don't think it really matters because the depreciation could be brutal.
Yeah. Well, you have a car. Again, guys, please make sure to follow Jason on X. You can get all of his updates and everything he's talking about there as well. Grab.
Why are they're all asking for Grab? What's going on? Is something happening right now?
No, it's just in general.
Ah! What's
I don't know. I don't know what's happening at this point, dude. I want to say the shorts are in control, and until they leave, they're not, we're not going to get out of this. Fundamentally, I don't think there's a thesis here that warrants this price. You had an analyst come out today, say 720. We reaffirm our target.
I'll tell you what, dude.
10% now.
Can you sell some juicy puts here?
I mean,
like leap puts. Like, what's a $4 put go for?
Let me check. I mean, the premium would be a lot better. I'm getting ready actually to buy a decent chunk of Grab in my 401k when I finish my 2025 contribution.
I would say not to buy calls.
I'm just buying stock.
But
a $4 put in a year gives you 62 cents, which is not that. And that's a 15% return. That's decent. You get the stock.
And you don't own it.
You get it at 358. 338, which means you're betting the stock.
I would say 358 does not make any sense.
Yeah, 338. Yeah, look, this is one of those things where it's annoying, but it's also like you don't have a reason for why it's annoying. And so you can only chalk it up to, okay, it's an international name. Okay, there's 4 billion shares. Okay, the street's not impressed by the growth. But with all those things factored in, it should not be below $4. And that's where I then start to question, okay, you got to give it another quarter. Let's see what happens in Q1. Let's see if management can kind of change the direction of this. And number two, if nothing changes after 6 months, at what point do you start blaming management? As much as I'm a fan of, the C-suite, at what point do you start saying, hey, like, these guys need to get the stock to go up?
What's the answer?
I don't know. Well, I think in 6 months, I think so, not in 6 months, in 3 months after, if by June, this thing is stuck at $4, I think there's a management issue. Not saying the company wouldn't put up the results. Like if they mess up on earnings, that's a different question. But if they beat earnings and the stock still stays flat, I feel like if you're Anthony Tan, you got to start making some phone calls to the institutional guys and being like, guys, what's going on? Why aren't you buying the stock? Like, what's happening? I mean, SoFi went through the same thing for 2 years, eventually broke out. And I think, Noto had to make those calls as well back then, even after putting up really good growth and try to get Citibank and Bank of America on his side. But I don't know. I don't know at what point you blame it, because you can't blame the company. Like, you can't say, oh, they're not growing. It's not like you can't blame that. So then who do you blame for the stock being stuck? Now, maybe the street's like, we need to see the sustainability of their operating margins went from negative 2 billion to positive 65 million in 3 years, which is not easy to do. They're getting zero premium for, becoming GAAP profitable.
Look, here's what I'll say. This was prior, like the breakout, right over here. Technically, since we're on the technical show and we're over time, but I love you anyways. If this was the prior breakout here, specifically at we have a super small inefficiency, like right over here, 366, which technically got filled, but I'll put 2 little lines, make these a little bit thicker. And I pull this across, it's support. So this is it. This is support. It could go down to 366. So I think that's your downside, but that is not much downside.
No, not at all.
So it's more of a long than a short.
I mean, Liberation Day, it hit 365, which is 20 cents from here.
Yeah.
So, I mean, it also might be one of those names, which the reality of it is, and people might just have to come to that reality, which is that this is genuinely a long-term investment, meaning you're buying it and you believe Southeast Asia will keep growing GDP. You believe hundreds of millions of users will eventually go onto the platform. They already have 120 million annual transacting users, 50 million monthly. And that over time, like in the next 5 years, do we think Grab is $10 or do we think the S&P 500 is $1,200? I would reckon Grab doubles in 5 years over the S&P doubles.
I think they both can happen.
Maybe five is a little bit too long. Maybe 3 years.
Yeah.
Because then, that's your argument to buy an individual stock over the S&P. But it's not getting to $8, $9, $10 tomorrow, which is,
Well, we know that they're not valuing it based on typical metrics. The stock market is not. So I think, probably different lens. It might be a policy thing or some kind of change in the country that would be the catalyst. But again, it's like, what is the catalyst here? This kind of, and it's not going to be earnings. It's going to be like a foundational policy, maybe change or something like that.
Yeah. So I think at some point, if we don't see a move until June, people have to either get out of it because there's plenty of other opportunities, which is a very fair point, or you're long Southeast Asia and that's your exposure. Like you have
we do that in trading. It's called a time stop. It's called a time stop. Like I do that all the time. It's like normally we talk about things that have like a technical stop loss from a price perspective, but time is equally important. We call it a time stop. We're like, you have this much time to make a move, and if you don't within said period of time, I'm done. That's just what it is.
It doesn't feel right selling it here, knowing the valuation and then knowing how much they're growing and knowing the shorts are really in control right now of the float. But also you don't know when that's going to loosen in terms of the control. And the easiest way to shut the shorts up in any stock is to just massive growth, right? Because those shorts have to at least consider covering. Grab told you they're going to do 20% growth and 40% EBITDA growth, which if they don't beat those numbers like the way NVIDIA beats numbers, then the shorts might not leave it. Same thing for SoFi, same thing for HIMS.
I don't hate this at all. But I don't know that like it could stop going down and then go sideways for a while before it. You don't know.
Okay. BMNR and Ethereum. What are we thinking about that?
Beamer, I'd be short Bitcoin right here, right now. Well, I take that back. I would have been short Bitcoin this morning. Dude, speaking of, did you know that Vladi has released these insane contracts on crypto? Like, I actually played with them today.
Like prediction market contracts?
Yeah. I feel like they would change everything. I'm kind of pulled up again on this prediction market.
What's an example of?
Every hour, there is a prediction contract that says you can predict that Bitcoin will be above or below X dollars. Like, and it's every 250.
I'm looking at it right now.
It's massive. Like, and I'm like, the amount of trading, because I blew through a few thousand contracts today, not gonna lie. Easy, right? Yeah, look at that. That is way more profitable because one of our guys, shout out to our guys, whoever's, if they're in the chat, I think it's TT or something on YouTube, but we call him Cool Whip. But he's posting this like prediction stuff on crypto, and I'm like, what? And he's like 500 here, 800 here, 1,000 here, whatever. I'm like, no way. And I'm like,
it's like trading Bitcoin, but in a prediction market.
Yeah, but as a trader, the way that these work, it's I'm just gonna say this, it's less risky than options. Because like I can see it, and I'm like, wow, the amount of commissions that can come out of this is intense because there's no volatility. There's no volatility. And I'm like, dude. So I think they got a little something brewing down here. And it's kind of wild.
Okay, so is bullish hood. It's not bullish ETH, unfortunately.
Hell no. I don't like crypto here. But you know, I mean, we'll have to see it in another $1,000. In about $500 on Bitcoin, we're gonna see. I would have been short this morning at like 71K. But that was the contracts I took. I took these, like, Bitcoin will trade below 71,000 within the next hour or so. I bought these contracts at like, I don't know, like some at $10, some at $5, some at like pennies, and they went all the way. Like, dude, what's happening right now? Literal like 10,000. Like, anyways, let me get off this, and we'll talk about this chart. That's just, it's not going anywhere. I don't know. It's bad.
I feel you. It's not doing anything.
Yeah, I think I've been pretty adamant. Like, where I bought it, where I sold it, this is not a buy. It's totally sideways. It's in the dumper, but 1281 is your support, and $24.23 is your resistance. This is now resistance in here. And this is support. Like so, near term. For the next week till we see each other again.
Okay, what about ETH? Same thing?
I haven't looked at it yet. I know Biddy. Let me just take a goose and a gander here. I used to have a buddy that said, take a goose and a gander. I'm like, what the hell is this guy talking about? Yeah, I mean, 18 is there. This is support, but it's these guys are trapped. So, I mean, you trade this it's such a tiny little range from like 21 down to 18.5. That's it. I don't think it's going to break but it's definitely not interesting enough to expect it to bounce either. You'd have to show me a lot more, like a lot more, over like 22, and then I could say, okay, we're going to go to 25, but not before then. Before then, I think it still continues to kind of like get into this support before it can do that. So here now, it's probably coming down a little bit more and retest this general area. I'd say 16s. If that 18.5 doesn't hold. But it's got to build support in this area. So it's not going to V recovery. We talked about this when we first got here. So I don't see V recoveries. I see like L's or U's.
Well, we might as well do Bitcoin then. I'm assuming you're seeing the same thing.
It's super similar. But see, like that's not bearish, but it's like it's not ready either.
Yeah.
So Biddy's at the
It was
60.
nice to see 71 though on this.
Yeah. So I had outlined, I don't think these are right. I got to readjust these. Or is it? So I know 69 is a pivot for sure. It's a big pivot. And we're trying to get over that. Oh, it's not this one anymore because we basically see this. When you lose this like area, this kind of support like that, you're going to go all the way back. So that's basically just what we're dealing with. So now that's done. And this thing needs to go all the way. To the next one, which is like 71 resistance. Oh, I didn't hit play. Oh, well. I do use this NFP stuff. Definitely works on Biddy. Let's go.
I just feel like this thing not collapsing below 60 is a win, even if it's not going up.
Yeah. So it was 70. It's the same thing. 70K. I think I had 71K. 70,034. We should see this 68. So that's all I would say is like, oh, it's short to here. Right there. That's it. So worst case, I think we have this kind of general area they would test. So like worst case, you get this kind of like basing and then we get back over. But 69 is in fact, like it's a bigger, like I said, it's a bigger pivot from way over here. It's a weekly chart. But this lower end support is still, it's in the mid 50s. Can it get through? We'll have to see something like this. Sideways, 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 and then back. But that's what we have to see. So this is kind of like, it's like IGV as a whole. It's like, is this the bottom? No, not necessarily. But across the board, I am looking at some things that are in the process of attempting to bottom, specifically in the software sector. So, but does that mean they're going to go up? That explicitly does not mean that they're going to go up. That does not mean they're going up. It means they're probably in a process, in the bottoming process. And so to do that, you have to go range bound for a while before you can go back up.
Okay. Adobe.
So intraday software was getting hit. Oh, dude, they got earnings coming. Day after tomorrow?
Yeah, Thursday.
This should be stuck. This should not go any lower. 261 was like a level from over here. I don't see that getting below that. I had a little counter trend bounce into up to 290s. That looks like it's played out now. That was resistance here. So this is where it should sit before it reports, in between 276 and 260. Probably hovers like right around the highs in here, but it should not leave this box before earnings. On earnings, different story.
Salesforce. Same
That is a
story.
laughable.
Oh.
Didn't they do good?
I thought the earnings were they're issuing debt to buy back their stock, so they are getting ready
Running
to
out of cash.
Yeah,
I thought they were cash flow positive. I mean, they clearly are.
It's not enough to buy back 50 billion of their stock. But it looks almost similar to Adobe.
Oh yeah, like for sure. Except that Adobe has a catalyst now, and somewhat of a catalyst, but CRM does not. It's past it. It's behind it. So the question is like, why do you buy CRM? I don't see people buying it. Like this thing has got to hold over 195. It's on it. So I mean, you could watch it tomorrow, but like if you're losing this area, this prior area right here, this goes down to 180s. I don't even know that this is a big deal here, because like I'll just tell you, the stock has looked like it's going to go to 150 to me and retest this area. But like if it's 180 tomorrow and you think it's possibly going to go to 150, that's not a reason to sell. It's just a reason to wait a little bit to buy more if you just bought it.
Okay. We'll do about 7 more.
If you have a long enough time frame. But this is like, it could be like bottoming as a process in reality. Everybody's like, we're just so used to these V recoveries not happening. Has not been in the cards. I see Bloom. I see Broadcom.
A lot of people asking about that.
You want to do Bloom?
Yeah.
I mean, there's a stick on my chart seems to be implying up. Hey, I will say, like, in my mind, I'm pretty sure I've been preaching this. I know I've been preaching to my crew, but I don't know so much on your channel. To me, energy is everything. Whether or not Bloom is the one, I don't know. I could guess that I'm going to change this to, we're going to go faster, right?
Yeah, like a minute.
I don't even know what the minute. I could guess that there will be, I mean, if I were to pull up like VRT or something, it might be all-time highs again. I have no idea. But it's the right sector. The chart is not broken. The chart's good. And again, there's no question on whether or not the market is not questioning whether or not there's spend in the data center space. So I think this is a better place. This specific stock to me has always been a little bit more speculative. So you have to take it with what it is. So 125 is this general support. This would be in the trajectory to hit the 175, 180s. But you're like right in the middle. So it's kind of like, huh, it's on track.
ServiceNow?
Meow is, so all these software names, again, if it's the process of bottoming, let's say we assume that these things are the lows. So I'm just going to take from this low to these highs, and I can actually see a little bit of resistance in here. So this 109 might be resistance or support. The problem I have with ServiceNow and what I'm going to want to see across the board is, yeah, you have these little channels that are really deep. If you get this, great. That's what I'd be looking for. That's the process of bottoming. It's not even up to there. It's like this. That's the process of bottoming. But it's a big bounce. It's a nice bounce. I'm still seeing this 130 as like your major area that you need to get through. So on a very small perspective, it's okay. It's constructive, but 123 is resistance. This is going to be support over here. So resistance, support. this is your range at the moment. Next.
Google.
Legoogs. Let's see. See what she's got. 100-year bonds, huh? 295, man. She's holding. Got a little breach. Might have been a little worrisome there. Was that Monday? Dude, they bought that bad boy fast. Look, so this has to get over 320 if you want to be out of danger. But you're not out of danger right now. You're actually more like at a bounce target. So I think realistically, you get back to this 300s and it goes sideways like that. So tomorrow, this can be a trade down to 300. If you're over 310, then you can get the $10 to the upside to 321, but not anything beyond that.
Celsius.
Oh God. So the staples have not been doing that great. I'm very upset that I didn't take this. I'm not that upset. I mean, I could be upset, but I'm choosing not to be upset that I didn't see this happen. I like it. I've liked it. This is support in this general area. It is here. Down to 30,750, but I don't think you're going to get that low. I don't think you're going to get that low. But resistance in 56s.
VG.
Probably expensive like Oxy. I don't know. Is it expensive now?
I mean, it's not the deal it was at $6.
Clearly. That's my question.
But I think this is, again, just like you said, with if energy prices go up, it's up. If Trump says war is ending soon, it goes down.
Yep.
So,
well, kind of, sort of. Because also the thesis in general for me is that energy is in fact everything. So like this goes in that wheelhouse, in that cohort. Specifically, nat gas is way more efficient than anything else. Yeah. Our nat gas in the U.S. is cheaper than global nat gas. There's that. So, I mean, I think it's in a good spot. I think at this point you've had a huge move. It's probably better to find out if this is cheap or expensive. I think it's had a big move. This can come, let me get a little bit cleaner because we have an absolute high. That was resistance. I mean, again, if this is holding over 10 and a quarter, it's probably okay. And I'd like to see this area hold as support, but that's where support is. And so if I can see a little bit higher support show up here, cool. But I think around 10 is going to be where you just broke out to. If you do get a big pullback, this is $9.83 is before any headlines, as far as I understand. That's the earnings move. You're testing this kind of earnings high. So, maybe that's why I had that. So from here, yeah, I honestly think that you're okay. I think you're okay here. Like as close to 10 as possible.
You want to do SK Hynix?
What is this? SK, what's the ticker?
So it's South Korean.
I'm all a striker.
I don't even know who has it.
It's HY, right?
Yeah. Yeah, there it is, the first one. Yeah.
Well, that's not, there's no ADR.
No.
I don't know that this is going to be the right one.
Oh, it is. That's the right number.
Create Stock Exchange.
Yep, that's it. That's it.
This is fine. I mean, like super extended, but you're still doing the act right kind of thing. 263 coming out of the lows of last year. You're right into this general area. So you want to see this hold. You have a break of structure over here. Retested. It's not too dissimilar to my GLW, actually.
Yeah,
just
it's not.
Clearly a lot more expensive. Optical stuff I still like a lot, by the way.
Yeah. I mean,
It looks
two of them
fine.
got into the S&P.
This looks like what's that?
Two of your optical plays got into the S&P, Lumentum and Coherent.
Oh, I didn't. I honestly,
You didn't know that? Yeah, that happened on Friday.
dude, have been so crazy with there's so much stuff going on right now. Like you would have no idea. We had a webinar to prep for, get ready and get that launch. We had, dude, did he do what? ERCX, he did not. I got the baby coming, all kinds of stuff.
Okay, so would you touch this here technically or no?
Well, I think you have extra fees if you're going to trade this. I don't even know if I can actually trade this.
The proxy would be EWY in the United States.
That's different.
I know it's different, but a lot of it is.
It's not even similar. So like we can look at it. So that's like saying I want to buy NVIDIA, but the proxy is the S&P 500.
No, but Samsung and SKynix are 50%. NVIDIA is 8% of.
That's ridiculous.
It's stupid, right? But like
That's the most ridiculous thing I've ever heard of.
The chart actually does look similar to Samsung. It's crazy.
I mean,
it's up 50%. Well, now it's up 30%, but it was 50%.
Yeah. So I like Japan. We'll see how that goes. But I'm at extensions here. As long as it can hold 120, I think it's fine. But if it's below 120, then I'm gonna come back down to retest these levels here around 100, give or take. This is a very highly volatile market right now. I had no idea it was 50% between these two stocks. That's insane.
Yeah.
That's insane. What about
Coupang?
I mean, this is Korean, isn't it? South Korean.
Yeah, I've never understood the moat on this company, but people have liked it for a while.
Hey, it looks bouncy at support. We'll see.
Okay, let's end it off with the last few and then we'll be done. Amcor?
AMKR. It's in its home. It's sitting here and it's home between 40 and 45. I think you want to see this actually chill in this area. I honestly think that this is going to be the best situation for Amcor if it can hold this area and create support right here. Like if this spends a while, I think it's done for right now. You're probably low end here, 35.50. But if you can traverse in this, I think that, and then post earnings, get up and out, 3 to 6 months from now, that would be best case. But I would not expect this to bounce ahead of earnings because the last report was a sell the news situation. It has nothing to do with whether or not it was a good report. Just basing this on the fact that it was a sell the news event.
SMR, nuclear.
I was thinking about like the sound and stuff. SMR. Is that the right acronym?
ASMR.
ASMR.
Someone said Technical Tuesday is like ASMR to them.
Dude, this is literally on the spot. I don't hate this at all. Like if you're going to take a shot, $11 is when you have stocks like this, they usually do exactly this. So you're really right back to it. I would say 19 was that's going to be your resistance from that breakdown, but you're right back into it all the way back, my dude. April 2025 lows is where you are.
That's pretty aggressive.
I like energy. I just don't like some of these nukes. Speaking of
Oklo.
Yeah, I mean, you see, like they stop going down as aggressively, so it's harder to short them. But like, something like this, you kind of just know like this is at a pivot. It's at a pivot, but like, are you actually interested here? I don't know.
CCJ.
CCJ is a real company, so that's different. And the chart looks completely different. Imagine that. Imagine that. So this is the real deal. But yeah, I don't hate this at all. But this one, unlike the others, looks more like it's at resistance. But this is the difference between Fugazi and the real deal.
Cloudflare.
CCJ does not.
That's been one of the better software names. Cloudflare.
170s. That was a pullback. So can we look at crowd then if we're gonna look at this one?
Yeah, we should.
Okay, so you're at resistance here. So chillax. That's this can go up to 220, but if you caught this low, you need to, as a trade, you need to take some profit from a trading perspective. It could go, but this is where you would expect some kind of pullback, and then you healthy would be to see this kind of come into 184 and hold, lock in another lower high. See, that's different. See how CrowdStrike is like slowly sleeper, right? So CrowdStrike had earnings. Look at this. Earnings. It's been a bit of a sleeper. It's slowly crept every day over 400 to 395, which was this prior pivot. This actually looks good. This looks like the pullbacks will start to get bought, is what this looks like, because it's not too far in your face. I think this makes me think I should look at Palo Alto. Maybe this comes back below 400, but if this holds a higher low, this is becoming constructive. There she is. So InfoSec is nice. These are not like, they're risky if you were to put new money in here because they're right into that prior breakdown areas. But again, if you have these pullbacks, call this to 150, and then you start to bottom out, that's the process of bottoming right there.
Right. Can we do UNH? CNC got hit bad today. This one's also been stuck, range bound.
Yeah, this needs a this is I've never been a big fan of UNH. I would rather HCA for a lot of other reasons, but yeah, I think this is still at risk. So there's no good news here, but all the bad news that we know about is also priced in. At risk means some bad news shows up that we didn't know about.
CNC was down 15% today on the subsidy stuff. I mean, it's getting, Oscar got hit, like.
Well, so each one has a different subsidy play, right? Within there. HCA is different. It doesn't have anything to do with subsidies like that.
Yeah.
This is like hospital. It's very different, but sorry. That's my only healthcare. Like, I own this. What can I look at one? I had a trucking company that I was talking about the other day. That's like, I haven't looked at this yet. I know that they had some pre-announcement or some guide where it's like 7% less. So these guys do the less than full truckload shipping for like a lot of data center stuff. And this is like, we would exclusively use SIAP for that. Big bounce to 420 and off the lows, pulling back to 350 here. I think this is getting a little bit more interesting. It's still below. I can turn on these NFP stuff off. This is more watched. It's a little weird that they didn't have a great quarter. Like, that's the only thing. Like, if these guys are like, oh, we didn't have the greatest quarter, or it's a pre-announcement kind of thing. That's what happened up here. they shouldn't be doing less volume. They should be doing more if the data center build is actually doing good. That's the only kind of concerning thing for me, but I don't hate this at all. Close to 330, I'd probably be a buyer. All right, next.
Light, Lumentum. LITV.
Optics. Dude, so yeah, all about it. I mean, it's it's right space. The what do we got? Market cap here, 47 billion. These things just get a little bit expensive. This is a smaller. I don't know how small of a player this is at 50 billion. If it is a small player at 50 billion, I'm going to turn this timer off. It's just way too much for a small player. So without knowing anything, this better be a big time player in the space. Otherwise, it's hot, but it does not look bad. It looks a little extended. Honestly, I'm going to say something. It sounds a little weird, but like as close to 5, the lower end of the channel, like the lower end of where it's been, is right in here. So this has got to be extremely high beta. It's got to be extremely high beta. That would be where.
Can we look at AAOI? Because I know that one's also on the optics.
It's also the same thing, yeah.
Yeah. Do you think this is too parabolic to chase, or?
Huh?
You think it's too parabolic to chase?
I think it's too small of a player. I think there's a lot of like I remember you talking about the OSS, but like if you're gonna be playing in the space, I want, for me, I need it to be real. Like I can't trust like some niche, super speculative thing without knowing definitively what their real edge is. Can this go to $1,000? For sure, right? But like, well, not that's $100 billion company. But if I'm going to be in something like this and I'm thinking that it's going to go to, I have to have an upside target. And as far as I understand, this is going to be a small time player in the space. Could it go to 200? Probably, but something like this could go to 200 one day and be at 120 the next day also. So that's the concern. And I just don't know enough about specifically this company, but looks good. 9 billion. Again, I don't really know the fundamentals. If you could tell me if it was high or not, expensive or cheap.
If they keep growing, it's not expensive, is my understanding.
And so that is exactly the issue that I would have, is that without knowing what makes these guys different than the next guy, it's going to be tough going. But optical fiber in general, look, will possibly start displacing some things like in the data center, some copper things. I had actually one of our guys, I think I could pull this up. One of our guys is like cables data centers, like for a living, sets these things up. And I asked him to send a picture of optical fiber, because like I feel like if you don't know the difference, like it's a massive difference. But where is the picture? I don't want to pull up the picture. He has so many pictures. Open. Let's see. I need to get one next to each other. Like this stuff is super thin. It's a bad picture. Hang on. So like this is what you're talking about. This is fiber compared to Ethernet, optical. Oh, I think here you go. So like when you're running data center, like this is what you're talking about, and this is like multi-mode, like fiber stuff. So like, dude, it's a big difference when you're running thousands of cables. It's faster. I just think that aspect alone, I know when we would build data centers or like spec them out, it's like whenever we could get optical, it was always preferred just because it's so much cleaner. It was a little bit more expensive back then, but I don't think that's actually changing. But that's the difference. I don't know if you knew that was the difference, but it's not a small
definitely did not.
difference. It's so I keep saying that it's like the size of a pen's ink. But if you could imagine, 1,000 cables of Cat 6 or whatever next to like way more pliable optical fiber, it's like, dude, it's it makes a difference.
Okay, last three, and then we're done. We'll do them rapid fire. AMPX.
Somehow I've gotten myself stuck. I'll just bring up a new thing and do a new chart setup. Hang on.
We did UNH already. Basically, it's a hold.
This is a battery company?
I believe so, right? Amprius Technologies, I'm pretty sure. It's up 100% this week.
This is like low float, high beta.
Dude, the names that are up this year, low float, high beta, small caps. Like, that's it.
But it's also the data center build still. This is also energy, right? Like, it's also the thematic stuff. So if you stay in the right place.
No, but some of those themes got nuked, bro. Nuclear, quantum, space, those were good themes until they
Dude. Those were never real. Like nuclear, quantum, I'm talking about energy to power the data center build.
That's fair.
Like, I'm not talking about shit that's 30 years out. I'm definitely not talking about quantum. That's not this era. Maybe at some point in the future, but you have to be very forward looking. Anyways, this guy. I think you can see 20s if this is the extension. 21 and a half, 21 changes, but high beta. This is a battery company, I believe.
Yeah.
Amprius. Yeah. This is a Tesla Powerwall. But for Bigly Powerwall, is that what it is? Drones. Oh, built for drones, battery for drones.
And drones are getting a lot more excitement.
It's drone batteries. Am I wrong?
I mean, that's what it seems like just off their website. I don't know that much about this company.
Yeah. Well, you know what? You'll be in town, Fremont, if you want to stop by.
Yeah.
Off Page Street.
Okay, last two.
Can I do a request too, though? Like when you come by, you know what? Damn it, it's too late to this. I really would like to do a live stream with you and me, and we go to the Oklo factory. I wanted to do this, the Oklo headquarters, knock on the door and ask them if this is where they have the reactors.
You should do that yourself. I mean, that would go viral, bro. Like, hey, are you guys building anything? But
I'd like to see the reactors, please.
Pagaya, PGY.
Yeah, it's another one that it's like Colty. I know nothing about
hasn't worked this year. Just has not
What is
worked.
it?
Fintech
What is
just
it?
hasn't worked this year.
How is this big? Big tech?
No, it's a fintech.
Oh, fintech. What? That's what this is. If you have fintech fintech's not the right space. So you got to look at the lens. Is the market good? Right? Cool. Is the sector? How's the sector doing? What's the sentiment around the sector? If it's not there, did you know, dude? Okay, can I just do this? Okay, we're done. Are we done with rapid fire?
We have one more. Lemonade.
Son of a bitch. Well, I said I was going to short Lemonade. I actually took a short on Lemonade, then closed it. So I wouldn't know. Well, I want to know if I'm going to reopen this now. I probably should reopen this bad boy, dude. We got a little bounce. We outlined like 3 weeks ago a bounce on Lemonade into this area, and I shorted it because I said I would. And then I had to close my short, but we're right back, and it's not going anywhere. This and you told me that it was an AI play.
AI
and so I'm going off of your recommendation.
I didn't say to buy it. I just said that's what I've heard is the thesis.
I kid. Look, it's actually at a very dangerous spot. So I think that this will pull back, but if the pullback doesn't break below 50 in strength, it's probably not going down yet. So like this is your support area. So I mean, like if you see this and then something like this could rip your face off too. So it's very short-lived, high beta kind of moves. So this sub 50 is support. That's what it is. And it's done this in the past. It's going to do this again. And then above, like around 50, like literally right around here is your kind of resistance area, 57s. This has got a long ways if the market's going to turn on companies like this. But right now it's kind of, this reminds me of like Oklo at 100, not comparing them, but like technically speaking, or whatever it was, 75, Oklo at 75, where it's like, okay, this is resistance for sure. And I could zoom it back over here and I could see all this stuff and I'd see them selling off. But if it doesn't like get sold off with velocity, if I'm trading short, it's going to be hard to short this if it doesn't just like fall out of bed, you know, because they keep buying it in this general area. But if trade location has become super important and the trades become short-lived too. So it's a little bit harder to trade, but it's not a long yet.
Okay. That's what we got, folks.
So I was going to say, so this was interesting. So tomorrow we get PCE, right?
CPI. Yep.
CPI. Did you see this? You might not have seen this. This is the Fed Watch tool. So yesterday or coming into Monday, we've been pricing 2 rate cuts into the market all year long. Nobody can see your, okay. And let me see if I can zoom in a little bit. So now this is what's currently priced in. Okay. So now we have, let's say one, that's where we don't have a rate cut priced in until September anymore.
Same as last year. Yeah.
This is one. And the next one doesn't show up until March. So we are no longer, yeah, that's the thing. We are no longer pricing in 2 rate cuts this year. And I think tomorrow's such a big day because of this right here that, I mean, I don't know if this is right or wrong. My gut might say that it could be wrong, but if CPI comes in hot, that's the thing. They're going to push this even further out.
Yes. And if oil continues to be elevated.
Bingo. And so if you're confused about why things are going sideways and what's going on, it's a mixture of geopolitical, it's a mixture of inflation really that we haven't been talking about because war has been such in your face on the headlines. And at the same time, we do have epic earnings. And we know that there's this massive generational data center build going on. So these 3 things, which is why I'm not really paying attention to an Anthropic headline. Sorry, Chad. But because these are the main things in the market that's really going to affect my money. That's what's been on my radar. And I think tomorrow is a big moment because of this. And if GDP does not come back, and if we do have high inflation, which, you know, we'll have to see what happens. But right here, right now, just so you guys know, we are no longer pricing in 2 rate cuts. We're only pricing in 1. And also on the NAI, I think Sam actually uses a lot, but I think he does. He used to.
That's a low number, dude. 79.
It's not a low number. This thing goes low. I mean, it also goes over 100, just FYI. But this thing usually bottoms. This is the exposure index. It's not a survey. It's not like, oh, how do you feel this week? Or like, what's your sentiment, Mr. Consumer, this week? This is like an actual like exposure measurement. We usually bottom below 60. So we're still somewhat high from an exposure perspective. And I'm, you know, exposure has been kind of going down here. but the S&P is also staying sideways. So we are very much at an inflection point. And when people start realizing either we're going to price out a rate cut entirely moving forward and push everything out till maybe 2 years or next year for rate cuts, or maybe this Fed watch tool is a big deal. So either this gets pushed out again, or the second rate cut gets pushed out even beyond March. Would you have guessed that we're only going to be looking at a one rate cut this year, pricing the market? It's crazy.
Trump will lose his mind if we get one.
Yeah. So this might go a little bit further. My gut tells me it's not going to stay this way, and we will probably get our 2 rate cuts. But in the transition mode of the market trying to price out any, if all, rate cuts, that could be the opportunity that we get as investors longer term.
Yeah.
So I'm looking at this. I'm looking at the exposure. Like, okay, there's still a lot of exposure out there, so it can come down a little bit. They can get a little wild with these predictions on what we're going to price out. Do I think this stays this way? No, I don't. But can it get worse before it gets better? Yeah, it definitely can. So that in a nutshell is really what I'm looking at, and why I've been saying patience. And then the big dip to buy this year is not until the eating season. And I want to be ready because I'm a greedy bastard. And
I also think part of the way to navigate this chop is the covered call, right?
And the covered calls.
At least have something coming in, because if we're going to go down, at least you're collecting premium, and if we're going to stay flat, you're milking premium. If we go up, it's like, okay, cool, but like force the market to actually make it roll.
I mean, when it comes, like you can slowly add, but like imagine like all of a sudden, if you didn't know that we're only pricing in one rate cut now this year, now you do. But imagine what happens if like all of a sudden, boom, we go back to pricing 2 rate cuts this year. Yeah. That's cold spring. So
But for that to happen,
after that, would have to, it's Halloween, Thanksgiving, Christmas, New Year's, Valentine's Day.
Mainly it's Thanksgiving, November-ish.
Yeah.
Or at least Halloween to November. But yeah,
it's definitely after Halloween.
For us to get those massive rate cuts, we're going to need inflation to actually come down, which with oil, we can kiss that goodbye if we stay at these levels, at least for March. February will be okay, maybe. And then number 2, we kind of need the Fed to be in agreement on the new paradigm of how we're thinking of inflation. And this Kevin Warsh guy, not only is he a hawk, if he can't convince the other
we don't know that he's a hawk. He used to be a hawk. He's a hawk when there's Democrats, right?
Dude, so most people, when they get to a certain age, they don't change who they are. In 2008, he was 40, right? I mean, at 40 years old, you've made up your mind about what your life's,
is that how it works? I didn't know that there was a cap on how when you can change.
In general, most people don't change. Once you get to a certain age, you're like, I don't know if he's going to get super dovish after being a hawk in 2008, which is why I don't know why Trump picked him. But the point is, like, if he can't
picked him because he said he was going to be a dove. That's
okay,
literally.
If he can't convince everybody because inflation's high and AI is not as deflationary yet, and oil, like one guy cannot decide to cut rates.
Yeah. And so in the meantime, they, meaning the market, will price in a stagflationary environment. That's what the market will do. The market will say it's stagflation. You'll start hearing that word. Whether or not it actually is or isn't is a whole nother thing. But in the depths of everybody yelling stagflation, that's probably the buy.
I agree.
Yeah.
Yeah, Kevin Warsh is 55, bro. I don't know if this guy is going to become a dub. That's why I still don't get why freaking Trump picked him. I really don't get it. But this,
wow, he looks really good for 55. I hope I look like that at 55.
By the way, these are Kevin Warsh. For those that don't understand how the Fed fully works, these are academic elites. These are people that have a worldview. They think their worldview. First of all, they're basically in an ivory tower, right? What average people are doing. They don't have any relationship to that. They're just philosophically and theoretically thinking in the abstract. What does it mean to raise rates or not raise rates? They don't have to struggle to pay their bills. They're well compensated, especially this guy. He worked at Stanley Druckenmiller's hedge fund. So, the idea that he has turned into a dove after 15 years of being ingrained in his own pursuit of monetary policy. I mean, he absolutely wants this job, but I think it's to impose his worldview on the economy, because this is the
he definitely has some different perspective on how he wants to be a dove, which is, I don't think, the normal way. And he does get a W for actually looking like Raymond, because I agree with that comment. You probably don't know who Raymond is, but I think he looks like Raymond too.
From Everybody Loves Raymond.
Yeah. Oh, look at that.
Dude, my mom used to have this in the background, bro. I know what you're talking about. I used to see it in the background. It was definitely
he does, right?
Memories. It was a funny show. Yeah. He does.
I mean, there you go.
All right.
In the meantime, come to the server. The server is free. Amit will drop the link. We launched our next phase of the School of Gains, so we have like a bunch of videos for everybody to catch up onto. If you're not in there, book a call. We'll hook you guys up. No, I did not record the webinar last time because you needed to be there, because I gave away a boatload of shit, and we'll do it again. So if you want free stuff, follow. We'll do some stuff. I have to wait a little bit because my people are yelling at me for.
When's the next webinar, or do you not have one yet?
I'm thinking we might. It's at least a month out, but we'll see. So we do have earnings season coming. So I mean, we could do something like that.
Dude, earnings? Can you believe earnings is a month away? Like
that's what I'm looking at. So like I might do an earnings season webinar on how. Can the chat tell me? So for the chat, I have a very explicit way of trading options through earnings. It's probably best to be an advanced option trader. I have like a verified, validated system that I've used for years. But if I had a webinar, can you get a poll? Like two options. Do we do the NFP stuff or how to trade options through earnings? Which one do people want to do? Or if they have another one, I could do another one. But
what wasn't NFP the last one, or no?
NFP was the last one.
Okay, so a repeat of NFP or a new? Okay, gotcha.
Or how to trade options through earnings. It's a full-blown system. Like do this, do that, do that. Basically what I do is like we calculate my sauce. I'll tell you this. I will know within a couple percent exactly what volatility will drop to after earnings. I don't know anybody else that can do that. And so I can come up with no, I can't do both because they end up being like 2 hours.
And so you effectively use the butterflies and calendar spreads on earnings as well, right? That's one of your
calendars and straddles.
Yeah.
I never gamble. So we'll be able to come up with we'll be able to come up with trades where like you don't care where this thing goes. Usually something can move twice the amount that it normally does, and I'm going to make money in either direction. So like that's pretty typical, but it's about how to set it up and how to know how to put the trade on, take it off, and manage it. And they're usually like 24-hour trades, like open at the close at the open, literally just like that.
Right.
I can't see the poll.
80% earnings.
Oh, really?
Yep. I mean, it is very useful. And Jason posted this video before NVIDIA earnings of him showing on Robinhood like what a calendar would look like. So I think
because I don't like iron condors like at all for earnings. Like I really don't like them just because I can lose so much more than I could potentially make. There's a different structure to doing these that people don't really know about that is way more limited risk and pretty reliable. But anyways.
Oracle ended up keeping the pump, by the way, up about
nice.
8%. All right, so if you are interested in Jason's stuff, please make sure to follow him on X, follow him on the Discord. His X description has his links that you can see, and then YouTube.
Yeah, server's free. Come into the server, hop in. It's totally free. You can chat with me, with the whole crew. We're all there. And if you want to get a preview of the apprenticeship on the website, just book a little call. Probably just tell them like, hey, you know me from TT or from whatever, and we'll hook you up.
Yeah, and then he streams every Monday, so you can subscribe to him on YouTube as well.
Yeah.
All right, everybody. We'll be back
All right.
tomorrow. Thank you all for being here. Jason, thank you once again.
Big day tomorrow.
I will see you in a week. See you in a week.
No, I'll see you Monday or Sunday.
Oh, no, I will see you Monday, actually. Dude,
What day are you flying in?
I'm flying in early, bro. I'll be there like 10 a.m. You should. That's a long drive for you. That early, like
On Monday, you're flying in Sunday night or Monday morning?
Sunday morning. Sunday morning.
When are you leaving?
Thursday. It's like 5 days.
Can we do TT from here?
So I have to look at the NVIDIA schedule because they have all this events.
Oh, yeah,
and
yeah.
shit, so that I have to share that with you, and then we have to figure it out. Maybe
Okay.
contingent on that schedule, but
Oh, look, I'll be your chauffeur. Or if you need to borrow a car, I have extra cars. Actually, I'll give you a car for the if you
I
don't
would
Uber.
like to drive an EV Hummer. I've never.
That's
driven-
fine. If you need a car, just hit me up. I got you.
All right,
Cool.
that works.
All right, guys.
Thank you, everybody.
See
We'll see you
ya.
guys tomorrow morning. Bye.
Later.
everyone.